Yo, what is up for everyone on the YouTube replay? If you skip in 25 minutes into the stream, that's when the market opens. So in 25 minutes, market's open, and then I'll give another stock portfolio update, the main one. But here's my portfolio before the market opens. This, if you look in the top, I've renamed this account to my dividend-only portfolio. So every stock in here does pay a dividend, and most of these are like dividend growth companies. Luckily, we are up on every stock in here. We're just barely up on Carlisle Group. I'm actually gonna individually analyze that stock for you guys in a minute here. And then we have everyone's favorite, my Webull portfolio. This is like my risk on account, and all time in here, we were up 17%, not exactly outperforming the market because we do have some losers in here like UiPath, Zoom, Sprouts Farmers Market's been struggling, TAP, Progressive Corp. I actually really like Progressive Corp as well as CALM. So there are some stocks I think are at pretty decent valuations right now. But yeah, I got some popular names like Super Micro, AMD, P6, Disney, Robinhood, SoFi, Reddit. So we do have some pretty crazy performers. And then finally, we have our buy and never sell portfolio. If you look in the top left, this is called our buy and never sell account. So once I buy a stock in here, I try not to just ever sell it. Hopefully this will be a good week, yo. I hope so too, Celebrate. In 20 minutes, the market opens and we'll see how stocks are either doing. Hopefully green. The market did hit an all-time high on Friday, so I am curious, will we continue that momentum? If we go to the QQQ right here, I mean, it's just so impressive how good it's been the past year, up 25%. Year to date, the QQQ is up 16.5%. And we're actually underperforming. We're only up 15.35. Oh yeah, we have a Roth IRA as well. Let me give you a quick update on the Roth IRA. We just bought a lot more stocks in here. If you haven't seen my most recent YouTube video, I bought 6 shares of Iron Mountain, 3 shares of Main Street Capital, some Cormedic shares, and 1 share of McDonald's. So yeah, that's our Roth IRA. Our Roth IRA is just a tax-free retirement account, but you can't withdraw the money till you're 20 or until you're 55, I believe. And but you can withdraw it beforehand. You'll have to pay a penalty, but penalty free, you can use it, your Roth IRA as a first time, if you're a first time house buyer, as a first time down payment. Yo, what up, 2Trick? Crispy, what's up, dude? Yeah, I actually want to go over this stock first real quick. It's probably a stock no one's ever heard of before, but let me give you a quick analysis on this stock. This is a roofing company, an insulation stock. They're a bit interest rate sensitive. This is CSL Carlisle Group, and I do own this company. They're in my dividend growth portfolio. And here's what I really like about Carlisle Group. First off, they just sold part of their business off. So when we go to the revenue, it says the revenue's down 0.08% year over year. That's because they just sold off basically 1/3 of their whole business. So that's why the revenue's been, on this decline, which is no big deal. The best part about this company is how safe their dividend is. They're making like easily 150, on average, they're making like 200 mil in net income a quarter. We go to see how much the dividend costs. The dividend only costs $43 million, but here's the best part. This is the part I really want you guys to understand. If you go to the total common shares outstanding on the left there right now, there's only 42.6 million shares. So remember, 42.6, if we go to 2019, let's say, it was 55 million. So it went from 55 million to legit 42 million shares in 5 years. So they are buying back their own stock like crazy, and you get a 1.3% dividend yield. They've been raising their dividends for over 49 years. So I love Carlisle Group. I might be biased. I do own them, but yeah. So another company I think is actually at a really good valuation. It's actually ticker symbol SFM, Sprouts Farmers Market. They're kind of being hurt a bit. Like if you look at them the past couple of weeks, they've been on a nasty downtrend. A lot of the grocery stores have, if you look at like a Kroger or something. But here's what I love about Sprouts Farmers Market specifically is how growthy they are. If we go to the revenue's up 17% to a new record. So the revenue's at a new record. So revenue's up 17, but net income is up by 40. That's insane. The number one metric you look at grocery stores is their net margin because it's such a low margin business, and they're actually growing their margins at a very fast rate. Like, this is why I love them, And also, they're a huge buyback play. I forgot to share with you. So if we go down here, kind of like Carlisle Group, their total common shares outstanding, there's now 98 million shares. So 98 million right now. If we go to 2019, it was 118 million. They've literally bought back over 20% of the entire market cap just since 2019. Pretty crazy. So yeah. Can you do a light? Let's see. What up, 2Trick? Yeah, let's do it. He said ALIT stock. Let's check it out. ALIT. And which one's a better pickup right now? Salesforce or Adobe? That's a great question. Yeah, we'll look at Adobe or Salesforce after this. So, yo, what up, legend? What is Kraken? Is that a stock? Give me the ticker symbol. But here's a light stock. I haven't heard of this company before. They're a $1.8 billion company. So do beware. It's a very, pretty small company. The stock's at an all-time low. Looks like they just started paying dividends. Can they afford that? Let's go find out. So one thing I don't love is if we look at this company's revenue, the revenue's down year over year. So the business isn't a growthy one. It's actually negative growth. The revenue's down 2% after falling 4%. And the net income, okay, so something just happened here. They lost $1 billion in net income, and that was pretty devastating. Yeah, their assets literally went down by $1 billion while their liabilities stayed the same. So that just leveraged up their balance sheet. That's terrible news. So yeah, it was a one-time adjustment. Like technically, they only lost the actual business only lost 27 million, but there was some gap trick, but that made them lose $1 billion in net income. That really did hurt them. Their assets went down by $1 billion. So I can kind of understand why this stock is at an all-time low. Plus, they just started paying a dividend, 3.59% yield. How are they paying a dividend when we look at the actual operating profits? It's so choppy, like they're not even making consistent profits. So I think it was a mistake for this company to even pay a dividend in the first place. But yeah, I'd be really careful with that one. Nothing's really blowing me away there. But yeah, let me look up Salesforce right here. This is one of the software names that have really been getting hurt by the AI thesis. Same with Adobe, Salesforce. Will AI replace this company in 10 years' time? So I honestly don't think so. This really relies on the white collar job market, and I love how diversified the revenue streams are. They're in service, they're in sales, platform, and other. They own Slack. That was one of the most expensive acquisitions they ever did, but it was worth it. So yeah, then Slack, integration, analytics, marketing, commerce. So I really like how diversified that they are. The sales are going nicely, high single digits. It's up 9% year over year. And the net income is up by 33. So they did actually grow their margins a bit, which is good news. 19% net margins on this company. I believe they just acquired, or no, the acquisition hasn't gone through yet. But if you go to ticker symbol INFA, Salesforce is acquiring this company right here. So that's why if you ever look at a stock and you see it look like this, that means that they're getting acquired. So all this revenue now, literally 400 mil plus of revenue is now going to be added into Salesforce's business every quarter. So yeah, that was kind of cool to see. But yeah, honestly, I think the risk reward looks pretty decent right here. They're still a bit maybe expensive, so I wouldn't go all in at this price, but I wouldn't call anyone crazy to make that as a small position. Hey, what up, Jen Shajan? How's it going, man? He said GRNT. I hope everyone's having a great Sunday, by the way. We stream every single Sunday at this exact same time if you're free. And I sell nothing, of course, no book, course, nothing like that. So anyway, if you look in the top right here, this is a 700 mil company. So the whole entire company's for $700 million. The stock is pretty close to an all-time low. They're in the oil and gas development and exploration business. Okay, so 62% of the revenue comes from the Permian Basin. You go forward, okay. Let's just go look at the financials there. So good news, the revenue is up year over year. Revenue's up 21. And was that real? Yeah, they did make net income this quarter. They should be making a little bit of net income every quarter. Balance sheet did leverage up a bit. Yeah, basically looks like an 8% dividend yield. That is tough. Can they afford that? So here's what we really want to look at. They're making 25. Actually, from the last quarter was 42 mil. That was really good. Let's go see how much the dividend cost. So the dividend cost 14 million of net income a quarter. So still a bit high, but 8% yield. I'd be careful with that one. I like the sales growth, but how do you research stocks? So I have a YouTube video on how I do it. I research stocks the way I'm kind of doing it live right now. Hey, Saltivore, thanks for the kind words, my friend. Thanks, Plasma. Yeah, what up, Plasma? He said ATRO stock. Let's check it out. This is Astronics. So, oh, wow, this one's actually been performing very well the past couple weeks here. Check out that momentum. Oh, yeah, we'll look at Kraken after this. Don't worry. I think that's just a crypto exchange. So, nothing, I wouldn't invest in that as an actual business. But yeah, this is an aerospace company. 95% of the revenue comes from aerospace, and it's growing actually pretty nicely. It's up 9% year over year, but there's some bad news. If we go to this business right here, it's only 5% of the revenue. It used to be a lot more because look at this. That revenue was down 46% year over year. So it used to be a 46% bigger chunk, but this test systems decline has really put a strain on their revenue growth. The revenue's only up 3.3% when we combine those two businesses. The net income is still a bit choppy. Like the profits, operating profit fell 36% year over year. So something happened to their margins. Gross margins fell by 8%. So kind of want to see the growth come back. Actually, their aerospace business is growing. That's the good news. You got to judge them off their aerospace products, and I haven't done much research on that. But yeah, look at them as an aerospace play. Okay, so let's try Kraken here. What was that ticker symbol? KRKNF. Wait, KRKNF. I can't find that company. Let me just type in the name. Are they even public yet? We won't spend more. Yeah, I can't find that name. Oh well. Oops. Well, I tried. Here's a great company. Yo, if you're looking for a dividend growth stock, this is a phenomenal pick in my opinion. Even though they're at all-time highs, I really think this one's just going to continue to climb higher. You won't outperform the market, but you should get like 6 to 8% a year, mostly from a dividend. So you get a 3% dividend yield with this company. If you're wondering what does AbbVie do, well, they sell a bunch of prescriptions like Skyrizi, and you won't believe the growth on Skyrizi. Check this out. Their Botox business has been doing really good. That's up to a new record, but mainly it's the growth of Skyrizi. Check this out right here. You're not going to believe the growth. They literally this business hits a record every year, every quarter. Like it's up 62% after going 45, after going 50, after going 63, after going 104. Like the growth is nuts on Skyrizi, and you don't look at the net income. If you go to the net income right here, they had these little like one-time adjustments. You really look at the operating profit to get like a real sense of how they're doing. But yeah, it's just they're like a mini Eli Lilly. They're great. They are great. Thoughts on any restaurants besides McDonald's, like Kava or Cake? Yeah, I just don't love them compared to McDonald's. I really think restaurants are in for some trouble. But yeah, like Kava is a bit expensive. Like Chipotle, I'd rather buy Chipotle than Kava because it's kind of like a safer bet. The Cheesecake Factory isn't growing too much. You know what? Let me look at the Cheesecake Factory. It's a popular one. Here's what scares me away from the Cheesecake Factory. If we go to their revenue right here, you don't even know the Cheesecake Factory is public. So most of the revenue comes from the Cheesecake Factory restaurant. And the Cheesecake Factory restaurant, the revenue is only up 1% year over year. Like that doesn't really even beat inflation. So it's not it's not a growthy business, obviously restaurants, but the revenue's up 1%. Like these are just single digit growth rates. So luckily they have these, like what's Other? How's that doing? The Other's up 17% year over year. They own North Italia and other Fox restaurant concepts. So pretty cool. If you go to the revenue, yeah, revenue's up 5.7, and they're making a good 30 to 50 mil in net income a quarter, and you get a nice 2% dividend yield. But I'd rather go with like a McDonald's. But the Cheesecake Factory is a lot better financially than a lot of other restaurants. Like I'd much rather buy the Cheesecake Factory than Wendy's stock or Jack in the Box stock. Here's actually a really cool restaurant stock. Here's the best restaurant stock besides McDonald's. You know what? Here's a good one for you. Actually, here's a great one for you, Crispy. Check this out right here. This is Yum Brands. It used to be owned by Pepsi. If anyone's ever been into a KFC or a Taco Bell, and you notice they only serve Pepsi products there. They only sell Mountain Dews, no Cokes, no Sprites. It's because Pepsi used to own these restaurants, and they spun them off. So Pepsi spun off Yum Brands. But yeah, they own this stock right here. YUM owns KFC, Taco Bell. Taco Bell is growing nicely, and then they own Pizza Hut and Habit Burger and Grill. Haven't heard of that before, but anyway, KFC and Taco Bell are some great assets to own. They make good money, good dividend too. Hey, what up, Malachi? He said AMR stock. That's actually a coal play, I believe. And unfortunately, the stock just hasn't been doing too good financially. So it kind of deserves this huge decline from being at all-time highs. But yeah, let me show you this right here. So they're in coal revenues. And this is the reason why the stock has not been doing too well. The business is on a decline. Like the revenue is down 32% year over year after falling 7%. So the revenue's down big, and not just the revenue, but the actual net income, the profits. If we zoom out to last year, 2023, this business was booming. Look at this. They were making a couple $100 million in net income a quarter, 200, then it slowly declined. Well, now it's negative for the past 4 quarters. So I would be very cautious with this name right here. You really want to focus. I guess if you want a coal play, this could be a way to get exposure to coal, but I don't know about that. Really seems like coal isn't too popular, like nuclear energy is, maybe even solar more than that. So hey, someone said Coca-Cola stock. You know what? We're talking about Pepsi here. Let's do it. And you know who owns Coca-Cola is actually Buffett, the legend himself. So if you go to Warren Buffett's portfolio right here, 8.7% of his portfolio is literally just in Coca-Cola stock. This is one of his better dividend plays. So yeah, with Coca-Cola right here, if we look at the dividend, you get a 3% dividend yield. So a very nice dividend, and they grow the dividend every year. So this is how you collect that passive income. That's how Warren Buffett does. He loves dividends. So also the P is pretty fair. They trade at 23 times PE, which means net income multiple. They trade at 23 times net income, and we can see they're making a consistent 2 to 3 billion in net income every quarter. Revenue is slowing down a bit. That might be why the stock has been flat for a while. Like the revenue is only up 1.4. It doesn't beat inflation, I guess, but still, it's a big Buffett play. He's a super investor, has to make all his trades public by SEC law. Buffett just bought the dip. If we go to his newest position, she just bought UNH, United Healthcare. That one was going crazy. Okay, APP skyrocketing. Oh, by the way, in 10 minutes, the market opens and we'll check out how our portfolio is doing. But yeah, Robinhood stock and AppLovin both just got added into the S&P 500. And this company is at an all-time high right now. And they deserve to be as well. Honestly, I wouldn't pay its current valuation, but they totally deserve to be at all-time highs. Check out the revenue. It's up 77%. That's extremely growthy. Revenue's up 77%. But specifically, remember this. They made $1.26 billion in revenue. Out of that $1.26 billion in revenue, $820 million of it was after-tax net income. And this wasn't some like one-time adjustment either. This was real. They really had, if we go to their net margin right here, they have crazy margins. Sorry, I need to reset this app right here. Slow here. Okay, yeah, 65% net margin. That's a better net margin than NVIDIA. That's absolutely insane. So you go spend $100 at this company, $65 of it is after-tax net income for them. They have an incredible business. They have no real competition either. Hey, Nathan, it's good to see you, dude. He said DLO stock. And hey, what up, Robert? Yo, we could look at the trade desk. Qubits, yeah, hey, I'd stay away from Qubits. That's a huge quantum momentum company with no real fundamentals. It's all just momentum right now. But we got to look at NU Holdings and UiPath. Remind me to look at those. And Fortinet, these are all great companies. But here's DLocal. It's a $4.4 billion company. I don't remember what this company does. So let's go look at their financials right here. Yeah, all that glitter. Sorry, that probably wasn't too helpful there. If you got another stock you're going to look at, let me know. But I'd be very careful with Qubits specifically. So DLocal, yeah, there we go. This is that transactional revenue company. If we look at where their revenue comes from, do beware, it's not, I guess, a bad thing, but 21% of the revenue comes from Brazil, 20% Mexico, 13% Egypt, Argentina, Chile, some of these other countries, but they're like a cross-border transaction revenue company. What I do love about this stock is how they're beating on expectations. The orange line is what the analysts expected. They beat on that. That's why they rallied up the most recent quarter. And another thing I really like is how they're making a lot of profits, a lot of after-tax net income, 30 to 50 mil. So not too shabby. Insane growth, 49% year-over-year revenue growth, but the net income did not follow that. Oh, actually it did, but it was a one-time. Okay, never mind. So anyway, DLO, they seem pretty interesting. I love that 50% year-over-year growth. So what about FCEL? Is that Fuel Cell? I think that was one of the free stocks I got with Moomoo. Dang. Oh, yeah, look at that. There we go. I sold my share at 50. Oh, that's reverse split. It definitely wasn't worth $53. I wish. But anyway, yeah, they definitely reverse splitted. Yeah, I'd stay away from this company probably. Let's go check it out. So what happens is, hey, if you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, the first link there. But yeah, they're a $269 million company, extremely small market cap. And if we go to the net income, yeah, again, you're buying a company that's worth $260 million, and the business lost $100 million or $92 million in net income this quarter. At least they have sales, but I mean, honestly, there's real bankruptcy risk here. I can see why the stock is at an all-time low. These are terrible net income losses, and it's just hurting their balance sheet. Yeah, I'd be super careful with them. Hey, what up, Mint? Hey, yeah, remind me to look at UU. Someone said, Path, please. Hey, dude, UiPath, I have nothing good to say about that stock. Actually, I'm not even going to look at them. They're a debt-free company. 30% of the market cap is cash. It's too cheap for me to sell, but I certainly would not recommend anyone touch this stock right here. It's just not a good one, in my opinion. I'm actively trying to get out of this stock, actually. So, sorry. Yeah, they do some buybacks, but yeah, they're just too cheap. So, same with Zoom. It's just too cheap to sell. So yeah, here's UUUU. This is Energy Fuels. It's a uranium company. So if you're looking for a way to get exposure to uranium, this is one of the stocks to do it because 83% of the revenue comes from their uranium sales. I noticed like the sales are a bit choppy. Like the sales were only 4 million this quarter, and that actually missed on expectations. Analysts expected 9 mil. They only reported 4. They've been missing on like every metric. So honestly, they have a really great balance sheet. If I was looking for a uranium play, I'd be super careful with that. I'd be super careful with all the uranium stocks because all of them aren't great. But the greatest one out of all of them is ticker symbol CCO Cameco. You get a dividend. They're in other minerals as well, but like this is the best by far uranium stock in my opinion. UEC is okay. They bought a uranium mine off Rio Tinto a while back. They've just been following the momentum. Do they have sales yet? Let me see. They do have sales. Actually, check that out. They did 50 mil of revenue this quarter. That's a big increase from the previous year. Anywho, UEC is another one to look into. So anyway, the URA ETF is interesting. Hey, Mo, what up, dude? I'm so upset I sold Oklo before it blew up last week. They don't even make you money. Hey, yeah, honestly, I'd be, I feel crispy in a long time from now in a little bit of time that the Oklo is going to be significantly under the price you paid for it. So you won't regret that in a little bit. Why is it Path is so popular lately? I have no idea. You know, I've never heard anyone talk about UiPath like before like this month. And I bought, you want to see where, it's probably not going to load here. But I bought UiPath legit like 4 years ago, maybe. I think 4 years. It just does not want to load, man. Oh, well, guess we won't look at it then. Just get out of there. All right. Let's do NU Holdings. I love this stock right here. It's actually a way to kind of get exposure to crypto right here. So check this out. They're at an all-time high. They deserve to be at all-time highs, in my opinion. The valuation isn't nuts. I mean, they're trading at 34 times net income. Here's why I think it's justified. Also, this is a crypto bank out of Brazil, and that's the country you want to be in for crypto transactional purposes because their currency is terrible down there. Like it's not too popular in the US for people to pay with crypto right now, but it is down there. So that's the best market to be in. 92% of the revenue comes from Brazil. And we judge them off their financials. The financials are insanely good. Revenue's up 28 after going 52, after going 64. And not just the revenue's growing, but the after-tax net income. They're legit making 500 to 600 million of net income a quarter, and these growth rates are insane. So I really do like NU stock. I add them to the watch list. I don't know if I buy them here though. Yo, Kefir Business. Elway dipped on bad news. IMO, it's a buy. LWAY, what is that? Lifeway Foods, is this what you're talking about? Or wait, Kefir Business, Elway dipped hard on bad news. Well, let's see. Yeah, the stock gapped down. There was no like earnings report, so there must have been some bad news. If I click on the news tab right here, I'm not. They withdrew the acquisition proposal. So there was a company offering to buy this stock, and now they don't anymore. So drinkable kefir and other pro bugs. So that revenue is actually growing pretty nicely. They sell cheese, so it's some sort of like dairy product business, drinkable yogurt. So anyway, let's see. Are they net income positive? They are. So yeah, they're making not huge, but still, at least it's positive and not negative. So Grid Clip, he said, can we look at FTNT? I love this stock right here. If you're looking for a cybersecurity company, yeah, what up, Thomas? Let's do it right here. So Fortinet, again, cybersecurity stock. And what I love about them is that they're a subscription model company. This makes it really easy. It's so to predict their revenues because it's all recurring revenue. And check out the growth here. It's insane. The subscription revenue or their security subscription just hits a record every year, every quarter. Like this is insane growth. And not just, the revenue, but after-tax net income. They're making over 400 to 500 million of after-tax net income a quarter. Insane, beefing up their balance sheet as well. They used to have more liabilities than assets. Now, since they're making so much net income, they can just add that to their cash pile. Like, Fortinet's doing great. What are their gross margins? 80% gross margins, 30% net margins is incredible. So yeah, I actually really like Fortinet. Nice cybersecurity stock. Stephanie said, IDR is a hidden gem stock. Let's check it out. So this is Idaho Strategic Resource. Yeah, look at that. They're at an all-time high. So, congrats if you own this stock. If you've ever bought it, you got to be up on your money. It's a gold company. Yeah, all the gold stocks have been going insane because the actual commodity of gold has gone insane. So, yeah, the revenue's up crazy, just like all the gold companies. Newmont Gold, Royal Gold. So if we just look at ticker symbol IAU, this is the actual commodity price of gold. And as you can see, legit, the price of gold's at all-time highs. So I'm not shocked to see all the gold companies doing great. So yeah, that one could have a dividend too. So let's see here. Yo, what up, Ken? How's it going, man? MVST, finally seeing movement again. Oh, Microvast. Yo, not Microsoft, but Microvast. Yeah, hey, let's check out this company, actually. They were, not that long ago, a penny stock. They were 15 cents. Now it's $3. So that's good news. They just missed like big on their revenue expectations. Did the stock fall on that? Not really. It's rallying up. Well, they missed on the revenue expectation the most recent quarter. The revenue's up 9%. Actually, they're now profitable. That actually is great news. They used to lose money every quarter. Now, in terms of operating profit, they're actually making some money now, which is good news. Yeah, it says they lost 100 mil in net income. There was some gap trick because the actual business made 17 million. Cash from operations is growing. So it's kind of like a mixed bag here. They missed on the expectation, but still growing nicely. Profitable now too. What's your take on MicroStrategy? So yeah, basically my take on this stock is I would rather just own actual Bitcoin. But yeah, this is a Bitcoin like holding company. And here's what they do. If you go to their cash and financing activities, if this is positive, this means they're diluting you either by issuing shares or issuing debt. And they haven't been issuing debt. So they legit just dilute the shareholder, raise a bunch of cash. They legit raised $18 billion of cash this quarter by issuing shares and bought 18 billion of Bitcoin. That's how the assets went from 9 bill to 25 billion and then 43, 64. And that 18 billion of Bitcoin they bought has since then appreciated 20, 30%. So it's just a Bitcoin holding company. Should just follow rhyme with whatever Bitcoin does. I'd low-key rather just own Bitcoin. Yeah. So let's see. Yo, what up, ZXC? How's it going, man? Is this a value investing channel? We're really just analyzing stocks here. Again, none of this is financial advice. UiPath just jumped on market open. Oh, the market's open now. Hold on. Let's go see how the market's doing. Or again, there's not much volume right now as this updates. Looks like Nvidia's down by 0.3. It literally just opened a minute ago, so it'll take a second for this to load in. The new chart and stuff. But yeah, NASDAQ's slightly red. That's actually good news. Barely down. It might even trend up a little. Tesla's up 1%. We'll come back to this as more volume comes in. We'll also see how we're doing in our Webull portfolio. Yeah, UiPath, it says, is up 0.59. Disney's down. All right. Yeah, hey, we'll wait 5 minutes and then get back to the portfolio update. So let's see here. Do you have a crypto account or any holdings of coins? No, I actually own no crypto at all. So yeah, I have no crypto. I kind of regret that with how good Bitcoin's been doing. But Nathan said APH stock has been a sleeper. Yeah, man, Amphenol Group has been one of the best performing stocks in the S&P 500. I mean, this chart is just ridiculously good. I'd even mind buying another share of this stock close to all-time highs at 107. Just continues to climb higher. This is the company that supplies NVIDIA their copper cables. So if we go to their communication solutions, it's literally at a record, up 101% year over year. NVIDIA has this new NVLink spine product. It uses 2 miles of copper cables, and Amphenol mostly supplies that, and that's just one of their businesses. They're also in the harsh environment solutions. Look at the growth here. It just hits a record every quarter. They're a serial acquirer. They acquire so many businesses. You get a 0.5% dividend. Actually, here's the best news. Like, the FCF, which stands for free cash flow, is up 114%. This is so growthy, it's insane. The revenue is up 56% year over year. So revenue's up 56, but net income is up 108. So that means they're expanding margins. Their net margins at a record this quarter, 19.5. It's never been higher. Amphenol is a actual beast, but the valuation looks it's too high right now. I see a lot of people talking about LDI, Loan Depot. I looked into it. So yeah, this is basically one of the mortgage companies that pretty much does exactly what Rocket Mortgage does. So it's like a Rocket Mortgage competitor. They're a smaller play. They're worth $1.23 billion. And basically, this should do better as we go into a lower interest rate environment, as people refinance their mortgage rates and stuff. So yeah, this is one of the mortgage plays, kind of like a Mr. Cooper, a Rocket Mortgage, an RKT. So yeah, Rocket Mortgage has been doing pretty good. So, 830. Why is gold at 36.80 an ounce? Can anyone tell me why? Hey, maybe the inflation problem. I don't know. A lot. The stock market's at all-time highs. Thanks for your analysis. Yeah, no problem, Eagle. All of these charts free on Moomoo. Yeah, Nathan. Yes, sir. By the way, yeah, if you want to get this little brokerage I'm on, it's a I'm on an app. It's where you buy stocks on. It's in the link tree in my bio, the very first link there if you want to get this app I'm on. So Noah said SoFi stock. Oh, actually, let me look at Home Depot real quick. I love Home Depot. This one also should do better as we go into a lower interest rate environment. Then we'll look at SoFi after this. But yeah, Home Depot is a nice dividend growth company. If we go to the yield, you get a 2.2% dividend, and they raise their dividend every year. So in 2021, you got paid $6 in dividends. Now you get paid $9. So, if you rely on this as income, you're getting a pay raise every year, faster than probably your job. And if you go to the net income multiple, it's pretty fair. They're trading at 28 times net income. For the industry, this is fair. The revenue's up 5% year over year, but they're making good profits, $3 to $4 billion of after-tax net income a quarter. They share it with dividends. They do share buybacks. So yeah, Home Depot's a nice one to just buy and hold as a dividend growth company. So here's SoFi Technologies. Oh, someone said Plug Power. Yo, Plug Power is a meme stock that's probably going bankrupt, but we might pull them up in a second here. I want to show you SoFi Technologies as well. I do own this stock, so do beware. I might be biased. Oh, wow. SoFi is up 1.15% in the pre-market. So yeah, look at that. Or the overnight market, I mean. So let me show you why this stock deserves that's a new all-time high. They're almost at $30 a share. That's insane. So this is one of my best performance stocks. We bought them 3-4 years ago, and I regret every share I've ever sold. Here's why they deserve a high multiple, this high price that they have. They're a fintech. They have their own banking charter. If you go to their financial services business right here, it is mooning. Like, it is up 105% year over year after going 80, after going 222, after going 264. This growth is insane, and it just hits a new record every year, every quarter. So the fintech revenue is blowing up, and as well as the lending business, it's up 30% year over year. So both main businesses are growing. I really think people and investors are starting to take SoFi serious. The revenue's up 42%. They did $850 million in revenue. Out of this $850 million in revenue, $100 million of it was after-tax net income. So they're great. Profitable company, growing. Nice. What happens is, yo, what up, SM Hood? Yeah, by the way, this is a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on and stuff. So let's see here. Yo, Tommy, what up, dude? He said, what do you think about Realty Income? Do you own any Realty Income? I actually do not own any Realty Income, but I do own a different REIT. I actually own Iron Mountain, ticker symbol IRM. They're a data center triple net lease REIT. When Realty Income is, they do triple net leases for like dollar stores, Walgreens, gas stations. So I used to own Realty Income though. I've owned this company for a very long time, but I sold them just because of my position and my age. Like, this isn't the kind of stock that you really want to have if you're a young investor. It just doesn't outperform in the long run. You buy this to maximize your dividend income. If you look in the middle of my screen, they have a 5.5% dividend, and they actually pay you monthly. So yeah, they're one of the few companies that actually pay you every month. So you get 5 to 6% of your money back a year. But notice this, Realty Income is the same price that it was back in 2019. So it's not too big on growth, but again, you buy it to maximize that income. I do like Realty Income though. Let's see what's down right now. Disney's down 0.5%, RIP. And then UiPath is up 3, SoFi's up 1.3. Nice. All right, so actually we can also check our other portfolios in a minute here. All right. What do you think of Rocket Lab? Yeah, I saw Rocket Lab. Let's do it. So yeah, hey, try not to spam. I'll try and get to all these ticker symbols here. ABAT, Plug Power. We'll try and get to all these. So here's Rocket Lab right here. This is my favorite space company out there. I wouldn't pay its current valuation. It's really tough to buy this one significantly over like $40 a share. But they're a really growthy stock. If you go to their space systems business, like, this is what I love to see. It's up to 27 after going 94, after going 9, after going 1,000. So the growth is insane on their space systems revenue as well as their launch services. So this business also is at a record. It's never been over 45 mil, up 60% year over year. So I really love Rocket Lab, and they're beating on analyst expectations. The orange line's what the analysts expect, and they beat on it. They are still losing net income every quarter, but analysts are expecting that. So yeah, they are. Do beware, they're losing like 50, 60 mil a quarter, but it's all right because of how growthy they are. They're also going through the Geost acquisition, which will add even more growth. So I really like Rocket Lab, but not its current valuation. I wouldn't put it as a meaningful size position right here. Made huge profit off Rocket Lab. Hey, that's what's up, Brett. Nice. Which application can I find on the? Hey, yeah. By the way, if you want to get this app I'm on, it's where you buy stocks on. It's called a brokerage. It's in the link tree in my bio, the very first link there if you want to get it. So here's ABAT. This is American Battery Technology. So they're a very small stock. Do beware. They're only worth 380 million. Are you in SoFi or Zeta? I'm in SoFi. I got 25 or 24 shares of SoFi. I sadly sold a lot of my shares at a much lower price. I regret every share I've ever sold to them. But anyway, here's ABT right here again. $300 million company. Do they have sales? So yeah, again, you got to be really careful with these ones. It's a $300 million company with 900,000 of sales, losing 10 to 20 mil a quarter. Like that's 5% of the entire market cap. You know, they're worth 200 mil, losing 11 mil is 5%, 5%, actually 10%. So they've lost legit a good chunk of their market cap. Luckily, they can afford these losses because it looks like they have no debt. Ooh, their cash is only at 2 mil now. So they've been actively diluting you. The cash from operations is negative. I'd be just careful with this one financially. Are analysts expecting sales? Nope, there's no real expectations. Anyway, I'd just be careful with that name. Wish I could give you more thoughts on them, but they're really not like making any money right now. Okay, so got any WPay or HOOY? What is HOOY? I actually do not own either of those companies right there. HOOY. Oh, that's the Yield Max Hood Option Income Strategy. Yeah, you basically buy this to maximize your dividend income. What's the yield? I bet it's crazy. Yeah, 36% dividend yield. Again, probably won't outperform. It won't outperform the actual Robinhood stock, but you buy that to maximize your income. Oh, Tyler, what up, dude? He said Nebius. You know who owns Nebius is actually NVIDIA. If we go to the NVIDIA portfolio right here, one of the stocks in here is actually NBIS, Nebius, and this stock is actually at an all-time high right now. Again, just because NVIDIA owns a company doesn't mean you should go do your own analysis on them. And when we look at their numbers, they look great, to be honest with you. Like the revenue is up 7x year over year, went from 14 mil to 105 mil. So this was a record, 105 mil. The analysts are expecting it to continue to climb higher, 155 mil, 260 mil. And they just got a huge, like legit $7 or $8 billion contract deal with, or a $17.5 billion deal with Microsoft. So yeah, that's the reason the stock gapped up so much recently. It's a huge Microsoft deal. So yeah, that's Nebius, owned by NVIDIA as well. I wouldn't buy them at this valuation, but they certainly are interesting. So what up? No problem, Tommy. Let's look at Uber stock. Yeah, man. What up, Crispy? Let's look at Uber. Then we'll look at SCHH. So here is Uber right here, a stock that I think is a perfect buy and never sell company. AI can't really take over taxis. Well, actually, I guess it could. Robo-taxis with Waymo. But actually on Uber, you can book a Waymo. So check this out right here. Here's a cool metric we get. This is their monthly active consumers. So not just like monthly active users, but people that are actively consuming their product is at 180 million. When the same time last year, it was at 156 million. So it looks like a lot more people are using their app. They're in mobility, delivery. How's the delivery revenue? It's up. The delivery revenue, which is Uber Eats, is up 25% to a new record. So that's booming. Their main mobility revenue is up 19%. That's insane. So if you go to the FCF, which is free cash flow, it's just ridiculous. It's over $2 billion of free cash flow a quarter, growing. The net income's just as good, easily over $1 billion in net income every quarter. Like Uber is an absolute beast of a stock, fortifying their balance sheet. Like you just buy and never sell them, even though the stock's at an all-time high. Like I wouldn't call you crazy to buy a little bit of them. Wouldn't go all in, full port it, but I'd happily own them. It's like a little couple, like 4 or 5% of the portfolio or something. So what about SCHH? Is that an ETF? So this is the Schwab US REIT ETF. So yeah, basically I like V&Q is another name. And if we go to this fund's top holdings, these are its what makes up the ETF. An ETF is just a basket of stocks, and here are the stocks that it owns. It's by market cap: Prologis, Welltower, American Tower, Simon Property Group, which is a mall, Digital Realty, Vici, Equinix. So yeah, you buy, yeah. So these REITs don't outperform in the long run. Like this is the same price that it was back in, 2016. But what you do get are nice yields, 3% yield. All right. Does Nebius still have room to go up? I don't know. Do you check private messages? I have a question. Not really. But if you can send it anyway, I might see it. Let's see here. Yo, by the way, watch out for people impersonating me. I'll never follow you, DM you. I don't sell anything. I have no course, book, nothing like that. So Richard said, thoughts on GTLB. Is that GitLab? So yeah, this stock just reported earnings and it kind of pranked us. So initially they fell on earnings and then they've recovered the whole entire rally because I think analysts realized the numbers were actually good. Like they beat on revenue. They beat on net income and they beat on EBITDA. It really was a good beat of a quarter. Sales were up 29. The net income losses, well, you really look at operating profit. The net income losses narrowed by 55, so they're expanding margins, beefing up their balance sheet. That great news. Actually, GitLab, everything's headed in the right direction there. All right, so Lucid has a $300 million deal with Uber. It's actually worth more than that, I believe. But that being said, I would buy Uber and I would never buy Lucid stock. Lucid stock, unfortunately, I think is just going to slowly trend lower. Sorry, what site are you using here? Yeah, hey, DW, if you want to get, I'm on a, it's where you buy stocks in here. I'm on a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. But here's Lucid. Here's why I wouldn't touch this company. I think they're sadly going to keep on going lower. So look in the top right, this market cap. They're a $6.5 billion company. So kind of remember that. The whole entire company's worth $6.5 billion, and they're burning through money. 540 mil they lost, 400 mil, 400 mil, a billion. Like just for all of time, they just burn through net income and like a lot of it. And when you're only worth 6.5 billion, losing 500 million is significant. And they're also sadly having to dilute you as well while the stock's at all-time lows. So in my opinion, Lucid's in a bad situation where it's not an investment you want to make. Like it's just not worth it. The risk to reward does not look too good there. Yo, what up, Randy? Thoughts on World Cup 2026? Yo, what up? Ed Music, what's up, man? The Ace said CSWC is a dividend monster. Happy Sunday. Good luck to everyone this week. Yeah, good luck to everyone this week. Yo, hope you guys are having a great Sunday. By the way, if you want to hit the follow button, we stream every Sunday at this exact same time. We kind of look at what stocks to buy next week. And if I go to the S&P 500, it's actually barely down. It's only down 0.03%. Apple's up 0.6, Tesla's up 1.7, SoFi's up 1.5. That's great news on SoFi. So yeah, it looks like the market's pretty flat right now. Guess we'll see. We'll check on it in a couple bits. So yeah, here is Capital Southwest Corp. He said it's a dividend monster. So unfortunately, this stock has not done too well. Same price that it was back in 2005. But let's check them out. I believe this is a BDC. So yeah, if we go to the dividend, they have a 12% dividend. This is one of the companies that actually have to, by law, pay up most of their taxable income in the form of a dividend, just to avoid paying taxes. And let me just look at how much their dividend costs. So they made 27 mil in net income this quarter. Let's remember that they made 27 million in the dividend. So look at this. Here's the bad news. The dividend cost 35 million of net income a quarter. I'm just, it's tough. Like I'm just not seeing it look sustainable. I mean, the stock, do you really trade these off their net asset value? So they could be paying out some of their net asset value to dividends. I don't know. I got to do more research on them. I want to see if they do first lien loans, second lien loans, preferred equity, whatever it is. My best and my favorite BDC of all time is Main Street Capital. Again, another one of the companies that have to pay out most of their income in the form of a dividend by law. So that's why they have these abnormally high dividend yields, but these abnormally high dividend yields are completely sustainable. So they also, because they're taxed differently, whenever you receive a dividend from them, they're actually taxed as short-term capital gains and not long-term capital gains. So you do pay, like if I receive even in my taxable account right here, this is my taxable account. If I receive a dividend from McDonald's or Google, it's completely tax-free, even in my taxable account, because it pays a long-term it's taxed at long-term capital gains, those dividends. It pays a qualified dividend. But Main Street Capital does not pay a qualified dividend. Its dividend is taxed as short-term capital gains. So that's why I own them in my Roth IRA. So it's also tax-free, that dividend. So let's keep going here. That's kind of got more detail than you asked for. So sorry there. But so let's see here. What up, Flippos? What up, dude? Or he said CHUG, Chug. I haven't heard of this company before, Chug. I actually can't find that stock. I type in CHUG. I cannot find that ticker symbol, unfortunately, there. I do apologize. Yo, what up, Luffy? He said EADSY. Let's see here. How's Zorro doing? All right, so this is Airbus. So it's basically just I think an Indian airline, or let me just see how they're doing. So the stock is at an all-time high right now. So first off, congrats if you ever own this company. You know, you got to be up on your position. No, so this is a European company. So we're going to convert their currency from European to USD. Airbus Defense. Oh yeah, so they're a defense and aerospace company as well, which is pretty cool. So yeah, 40% of the revenue comes from Europe. 25% Asia, 23% North America. Well, let's go check out how they're growing. So the revenue's up 10%. That's crazy. Nearly 20 billion in revenue. And they're doing around a billion in net income. If you average it out here, yeah, they're doing a billion in net income a quarter, a little plus. What's the multiple on this company? So 31 times net income. All right, that could be fair. You know, so anyway, yeah, it looks like they're doing better than your average airline because they're in the aerospace and defense industry. What's good, fellow Rust player? Hey, what up, Frost? Say, hey, good to see you. So, TikToker said, by the way, SCLX stock is up. Okay, so this is a $150 million company, extremely small market cap. Let's see. So they sell, looks like prescriptions, Tilodo, whatever those are called. Let me see what is the actual revenue here. So the revenue is, so yeah, it's hard to like trust your hard-earned money in these kind of companies. Like they have way more liabilities than assets, more liabilities than the entire market cap, all for a business that is declining. The revenue is down 40% year over year. And no, they lost 45 mil in net income this quarter, 26 million last quarter. The whole company is only worth 100 mil and they just lost 44 mil. And they have 3x. That company is probably going lower. I'd be super, super careful with that one. Hey, yeah. Okay. So Micron, what up, Lewis or Lois? Let's check it out. MU Micron. So yeah, this company is like a cheaper NVIDIA, one of the cheaper semiconductor stocks out there. Even though the stock is at an all-time high, the multiple is pretty like fair for the industry. I mean, they're trading at 29 times net income. The industry average is 45. So, you know, if you look at AMD, Broadcom, NVIDIA's valuation, pretty insane, but they're just as growthy. If we go to their computer networking revenue, it's up 97% year over year to a new record. That's great news. And, you know, the profits are as well. You know, this used to be a tough business to buy. They were losing over $1 billion, $2 billion in net income a quarter, but now it's dramatically improved. I mean, making $1 to $2 billion net income a quarter. Sales are up 36 after growing 81, beefing up their balance sheet. You get a dividend too. I don't know if I'd buy them here at all-time highs, but I wouldn't be shocked to see them continue climbing higher. Luckin Coffee. Hey, what's the ticker symbol for that one? That's like actually, I'll just find it for you because I got you. So here it is. It's a Chinese company, LKNCY. So yeah, this company has been giving Starbucks a run for their money. So it's basically a Chinese Starbucks competitor. We're gonna convert their currency from Chinese to USD. And check this out right here. Their number of stores. These are some cool metrics we get. Wow, that's a huge increase year over year. They're opening up so many new stores and franchise stores. Same store sales growth is 13%. You know, that's probably from just opening new stores, but that's insane. You know, McDonald's is lucky to get like 2 to 3. So let's see, transacting customers, 91.7. Oh, average monthly transacting customers is 91.7. versus 69.69 a year ago. So anyway, yeah, the revenue's gone very nicely just from opening up new stores. The revenue's up 49%. And out of that, they're making, honestly, this is not financial advice. I'd rather own this stock than Starbucks right now. They're making a lot of net income. You don't get a dividend, but yeah, this is the company that's, the reason Starbucks is struggling so hard in China is because of this stock right here. So yeah, I'll put them on my watch list. That's Luckin Coffee. So, oh yeah, retiring. What up, dude? I forgot to get to this one, but to be honest with you, I have nothing good to say about this stock. I don't think you should trust your money in this one. Sadly, I think they're going to continue to climb lower. And here's why. You know, I don't like to, think I'm right. I'll show you the numbers for yourself, and then you can draw your own conclusion. So check this out. They're a $2.5 billion company, and the stock is pretty much at all-time lows. Usually, if you look at their financials, it usually explains why they're at all-time lows. And here's the thing. Remember, the company was worth 2.5. And I mean, just this one quarter, they lost 1.34 billion of net income. Look what that's devastating. Look what that did to their balance sheet. Their assets went from 4.7 to 3.6, and their liabilities stayed the same. It leveraged up their balance sheet. I mean, it crushed them. They lost 230 mil this quarter, 200 mil, 200 mil. Like, they just burned through net income for eternity. Like, this just isn't a business you want to own. Revenue's up 21, but that's after a 45% decline. It's just sadly probably going to go lower. Hope not, though. All right, what up? Polar said IDAI. Let's check it out there. So, we don't really cover actually, we're not going to cover this stock right here. If you look in the top right, the market cap here, the whole entire company is worth 7.5 million. 7.5 million. I mean, it's not even going to get our attention here. So, the revenue is 800,000. Super careful with the company. We're 7 mil. Hey, yeah, no problem retiring. Appreciate you being here. Hopefully everyone's having a great Sunday. By the way, if you want to hit the follow button, we stream every Sunday this exact same time. So yeah. Hey, what up? Semego said PBR stock. Is that Permian Basin? No. So this is Petroleo Brasileiro. Okay. Yeah, let's go check out their financials though. They're SA, which means South American, or South America. Yeah, let's see where the revenue comes from. So yeah, domestic market, refining, transportation, and marketing. The revenue is down 10% year over year, probably just because the price of oil is. And operating profit, net income fell by 15, but they're still making like a good amount of money. A 15% dividend yield is insane. 15% yield. Basically just an oil and gas play. These don't really outperform in the long run. Like, look at this stock. PBR is the exact same price that it was in 2005. So you basically buy that, you maximize your income there. 18% yield is pretty crazy. Yeah, sorry, Polar. If you got another stock you want me to look at, let me know there, Polar. I do apologize. So what up? EVLV makes security machines, metal detector scanners, bought a small amount in light of increased violence. Okay, let's check it out right here. So they're a $1.3 billion company, and the stock has had a nice rally the past couple of months here. Let's see. Yeah. So develops, manufactures, sells security screening products. So that's pretty niche. Not many companies are doing that. The revenue is growing nicely. It's up 29 after going 27, and they're not net income positive yet, but they're not losing too much money. The losses are narrowing at the same rate of the revenue growth, which is great news. Cash from investing activity. Okay, well, anyway, and that one seems pretty niche and interesting. Thanks for that one there, Crispy. So thoughts on RDNT and then Arbor Realty Trust? Yeah, what's the ticker symbol for Arbor Realty Trust? That one, it's either a REIT, it's a mortgage REIT, or a BDC. I think I've heard of them before. So, we looked at Fuel Cell. Fuel Cell looks like a joke. We'll look at Blaze after this. What up, Plasma? So this is RDNT, Radnet. The stock it's done great since 2019. It was $21. Now it's $76. What do they do actually? So imaging centers, Imaging centers revenue is up 9% after going 14, after going 14. So all the revenue comes from the U.S. They're beating on analyst expectations. The orange line is what the analysts expect. They're beating on expectations. They beat on net income this quarter. Revenue is up 8. They're making net income every quarter. Okay, interesting. What happens is, what up, Lycan? Yeah, by the way, this is a software. It's a brokerage where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Reddit, please. Yeah, well, look at Reddit. I do own this company, by the way. And honestly, this stock deserves to be at an all-time high, in my opinion. Forget the name Reddit, for example. Let's judge them off their financials the way we would any other company. And when we judge them, it's so insane how good this company is. Like the revenue's up 77 after growing 53. They're the most profitable they've ever been. They used to lose money. Now they're making net income every quarter. The free cash flow is also super insane. It pretty much takes nothing to run this company. They have 90% net margins. They're debt free as well. Like that just takes a lot of risk off the table. Huge safety net. They have literally $2 billion of cash, up from $1.7 billion, and no debt at all. Their ARPU, their average revenue per user, is up 48% year over year. So they're making 48% more revenue per user. They're making $5 per user a year. They're beating on expectations. The orange signs with the revenue expect, they're beating. So Reddit's a beast. I probably wouldn't pay current valuations. I do own them, by the way. Let me actually show you that real quick. Reddit is down on the day. We're up 171% on them. They've been one of our better performers. We got 4 shares of them, but I love them. So let's look at BLZE here. Sure, BLZE. So this is Backblaze. Haven't heard of this one before. Yeah, $560 million market cap. Blackblaze Cloud Storage. Well, that's growing very nicely. It's up 28% after growing 42, after growing 40. Small numbers, but still pretty nice. Computer backup business. That's up 3% year over year. So the revenue is expected to continue to climb higher. They're beating on expectations. They're still losing money, but they're barely losing any money. Actually, this one's actually pretty good. They're deleveraging. They're losing less and less money. The revenue's growing. So if you're looking for a cloud storage company, I wonder if they might not have a moat. I don't know, but maybe they just do what Google does, but I don't know. I got the program. It's awesome. Hey, nice retiring. Yeah, it's my favorite one too. I love this one. So, ABR, bro. Okay, or ABR. There it is. It's the third one. Arbor Realty Trust. Let's check it out here. So yeah, a 13% dividend yield. Yeah, I usually buy these. I think it's a mortgage REIT. Let me double check here. Yeah, mortgage REIT. So you basically buy these to maximize your dividend income. They don't really outperform in the long run. You'd be better off with buying just the S&P 500. Looks like they're missing on expectations. They were expecting 73. They only made 68. They're missing on every metric here. That's so. From a fundamental point of view, I don't love to see this. I don't love seeing the revenue decline 18%. They are still making profits here. Let's go see how much the dividend costs. So normally, if we look back here, they were making 75 to 100 mil of net income a quarter. And the dividend cost 70. Oh, the cost of the dividend went down. So I think they just cut their dividend. It went from 99 mil to 73 mil. So they at least need to make 73 mil. They used to kind of afford that, but they only made, I think it's tough. Yeah, they did just cut their dividend. Look at that. It went from 43 cents to 30. So that explains why the cost of the dividend went down the most recent quarter. I'd just be careful with them. Sorry if that wasn't too helpful there. Hey, Jeff Mag, so nice to see you, man. Hope you're having a great Sunday. Yeah, Chime Financial. They just IPO'd. They're on my watch list. Let's go look at their financials here. Unfortunately, there won't be too much for me to look at here because they did just IPO. But we can see the expectations here. It's supposed to go. Let's see the net income expectations. Okay, they're supposed to barely lose any money. This was their IPO expense, so they didn't actually lose 900 mil. They have a pretty good balance sheet as well. Revenue, come on, please. Before I have to reset this app, unfortunately. Okay, revenue. Okay, dang it, Moomoo. Well, we won't be able to look at it. But anyway, there's not much for me to look at here on Chime Financial because they literally did just IPO. So yeah, actually the revenue's up 37% year over year. So that is good news. Went from 390 to 530. So that's good news. All right. So Palantir, what up, Georgian? What up, dude? He said PLTR. Yeah, I love Palantir, man. Hey, German, what's up, dude? So here's Palantir. This is an S&P 500 company that honestly just deserves to be at all-time highs, but the valuation is too nutty to buy. Hey, Scott, thanks for the roast there, Scott. I do appreciate that. But yeah, if we look at Palantir right here, if we look at the PS, which is price to sales, not price to profits, not price to net income, but just the price to revenue is 125. Pretty insane. But check this out right here. Half the revenue literally comes from the government. A lot of police stations are using Palantir's, software, and this business is growing insanely. Okay, well, I might have to Sorry, my Wi-Fi is really slow today. It normally isn't. If you want to hit the follow button, by the way, we stream every day. But yeah, look at this. The government revenue is up 49%. Like the growth rate is growing. So the government revenue is up 49 after going 22, after going 15. So the growth rate's growing on the government revenue and the commercial side with S&P 500 companies like Google. That's up 46 after going 33, after going 10. So super growthy company that's now making profits. They had their first ever $1 billion revenue quarter. Out of that billion, they did 330 mil in net income. So that's easy margin math. Fortress, absolute fortress of a balance sheet over here. They have $6 billion of cash and no debt. So, dude, Palantir, I'd love to own them, but at a lower valuation. Would love your insights. I'm new here. What up, Dr. Thunder? What did he say? I don't know. Cinema or Sienna on fire. Yo, if you got yeah, basically we're looking at stocks here. If you got a ticker symbol for me you want me to look at, let me know in the chat here. Chime to short the pharmaceutical sector tomorrow at market open. Hey, what up, Brad? Let's see. Nothing until they get a license. Yeah, I heard about that too. So thoughts on, wait. Yo, what up, Mike? He said, are you still watching IMPP? Let's check out the stock right here. Oh, then we can look at COP. I think that's Conoco Phillips. Do you have a dividend portfolio? Yeah, Brady, if I go over here to my Robinhood portfolio, if you look at the top left here, it's called dividend only. So this is, these are like dividend growth companies, but yeah, every stock in here pays a dividend, even Meta, Google, most of these are like dividend growth companies, but still on them. But yeah, let's look at IMPP stock right here. I've actually, they're not on my watch list and I don't remember looking at them before, but let's go analyze them. So this is Imperial Petroleum. Worldwide is where the revenue comes from. Do they have sales even? So the sales are 36 million, down 22% after falling 20. So the sales are down bad from 2022. Are they profitable? So they are actually, they have good margins. Okay. That was loud and annoying. So okay, we're back now. TikTok made me fill out a caption because it said it was AFK on the studio. But anyway, I like that they're making net income every quarter. This is good news. The fact that they're profitable. They have a really good balance sheet for this too. Looks like, actually, they might have just issued the tiniest bit of debt, like 100 mil of debt. But yeah, I like that they're making net income every quarter. We kind of want to see the growth come back, but it's not their fault. Just the price of oil is down. So Exxon, Chevron, they're all kind of seeing the same kind of decline. But I like their margins. Yeah, 30 to 40% net margins is crazy for an oil and gas company. Do we think NVIDIA and Intel are too high to buy? Yeah, I think so. I would honestly, NVIDIA and Intel both don't look like buys right now. I work at Sienna in our hyperscalers business. Yo, what is that? What is that, Dr. Thunder? If you have a ticker symbol you want me to look at, I can check it out for you. But Nathan, can you move your name down so we can look at the stock's name when you're reviewing it? Wait, I think, does it really like not... I didn't even know it blocked it. I think if you hold down on the screen, you can like clear the display. SCHH or Realty Income. I would go with, well, actually, what's the expense ratio between V and Q is like probably the best one out there. Let me see what its expense ratio is. So expense ratio fee is 0.13 and SCHH fee is 0.07. Actually, SCHH has a better expense ratio than Vanguard does. So actually, I like that one. So, okay, check out SM, please. Yo, do we want to look at NVIDIA too? I can maybe check out NVIDIA as well. So here's SM Energy. It's a $3 billion company. So unfortunately, this stock is the same price that it was back in 2004. So you bought the stock in 2004. It's the same price that it is today, unfortunately. They have a 3% dividend. Look at that huge growth. Dividend went from 2 cents to 74 cents. That's pretty crazy. So yeah, they're another oil company. Oil production revenue. How's it doing right now? The profits look great here. Here's the net income. They're making $200 million in net income a quarter pretty much. The revenue's up year over year. You know, that's really good right now. Revenue's up 23 after going 15. The margins did fall year over year. They actually fell by quite a bit. Yeah, the net margin fell by 22%. But yeah, that looks like an oil and gas play. There's usually, you get a nice yield. Usually you get a, usually in a recession or inflationary environment or war fears, oil usually does good. So CIEN, Sienna. So, oh wow, this is a huge company actually. Hmm. They're a $19 billion market cap. So a $19 billion company. The stock just had a huge gap up on earnings. Let me go see what they do. So yeah, nice beat on revenue. They beat on revenue. They beat on net income. And they beat on EBITDA. So it was a nice quarter. Triple beat. They're in networking platforms. That's up 35% year over year. Are they profitable? Yeah, they are profitable. They're making net income every quarter. So yeah, it looks like they're just beating on every expectation from the analyst, and that's why it gaps up so much. The sentiment must have been in the toilet because if we kind of scroll out there, it looks like the stock is still like the same price that it was in 1998. But they've been on a nice recovery. Yeah, the past couple months have been insane. Is this Webull? Hey, no, this is not Webull. I do have a Webull portfolio though, but no, I'm on a different brokerage. This is a brokerage called Moomoo. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. All right, so Plasma said, hey, what up, Calvin? Wait, we got to look at this one. What's your year-to-date return on your accounts? I'm at 19%. Yeah, I think I'm at like 25 combined. All the portfolios, like 25% year to date. So here's Cadence Design. This is in like the NVIDIA ecosystem. I'd love to own this company. They're really great, but they've always just traded at too expensive of a valuation. They traded 100 times net income. Let's see, Core Electronic Design Automation. Let me just see, what are they reporting? So yeah, they just beat on revenue. They missed on net income right here. It must have been some sort of one-time adjustment because the EBITDA beat. So yeah, the revenue's up 20, and it says the net income fell 30%. That's why the PE looks higher than it really is, because there was some sort of adjustment here. So yeah, they're making 300 to 400 mil a quarter, grew 26%. Revenue's up 20, so they're growing their margins a bit, which is good news. So yeah, that one, I love them, but they're just too expensive for me. All right. So EL, what up, dude? Yeah, we'll look at Novo Nordisk as well. So ERO company, let's do it. What up, Plasma? So this is ERO copper. Yeah, so I actually like the commodity of copper. What's the market cap? So a $1.7 billion market cap. Let's see. So they're in Brazil. Oh, these are all Brazil. So, okay, all the revenue comes from Brazil. That's okay. The revenue's up 39%. That's really good growth. So revenue's up 39, and their net income positive. They made 71, 80 mil in net income. Actually, you really probably just want to look at the operating profit instead of net income. They're making insanely good profits, 50, 40 mil a quarter. And dude, no way. Yo, Polar Monkey, dude. Shout out to the homie Polar. Dude, he just dropped a huge TikTok galaxy. Yo, dude, I really do appreciate you, Polar. I hope you're having a great Sunday. If you got another stock you want me to look at, let me know, man. Thank you so much, Polar. I really do appreciate that. Shout out to Polar. So yeah, thanks, Jace. Yeah, W Polar right there. Thanks for that galaxy, dude. By the way, if you want to hit the follow button, we stream every Sunday this exact same time. So here's Novo, and I sell nothing. I have no course, book, WhatsApp. I'll never follow you or DM you or nothing. So here's Novo Nordisk. This is that weight loss prescription company. So if you've heard of Ozempic, you've heard of Wegovy, this is the company that owns it. Elon Musk is on Ozempic. And yeah, it's basically a pure weight loss play. 93% of this company's sales come from their obesity care products. And right now, the business is booming. We go to their revenue. The revenue is up 23% year over year, and the net income is up 45%. Those are their expanding margins. They're making easily over $4 billion of after-tax net income a quarter. You get a very nice yield, a 3% yield. But one thing I think that's really been weighing on this company has been the fact that they lose their exclusivity for Ozempic in about 2 years. So that's why the multiple of 15 is way lower than the industry average. They're seeing a lot of increased competition from like Eli Lilly. But yeah, that's Novo Nordisk. I actually think the risk to reward looks pretty decent on them right here. Yeah, that's your weight loss prescription play. So let's see here. Yes, hold down to clear screen. Oh, nice. Okay, that does work on YouTube. Cool. I know it works on YouTube, or I knew it worked on TikTok. I didn't know on YouTube you could hold down the screen and hide it. So let's see. Thoughts on the Gemini? Oh, wait, let's look at Lyft right here. LYFT. So yeah, this is an Uber competitor right here. What up, Zone 2? Yo, can you look at FTT? Remind me to look at FTT after the Zone. I haven't seen you in a while. Good to see you. So this is Lyft right here. This, again, Uber competitor. And Isaac, thanks for the rose there, Isaac. I do appreciate that. I think now out of any time ever in the past, like Lyft is the most justifiable buy because they now have actual profits. Like if we zoom out on this company, it used to be a tough buy. They were just burning through money, losing a couple $100 million a quarter. Then it slowly improves, but now they're actually making profits. For the past 3 quarters, they've made net income every quarter. The revenue's up double digits. It's up 10% year over year. So yeah, they could also, rumor is Tesla might acquire them. I don't know. That could be very interesting. Tesla has to get their market cap up to $7 trillion to get his $1 trillion pay package. Maybe he could get the market cap higher by M&A, inorganic M&A. Hey, what up, Jace? Let's do it. USAR. So this is USA Rare Earth. So I think it's like a smaller MP Materials. They're only worth $1.5 billion. So if we go to revenue right here, it says 0. So it's a startup right here. So it says no data on the revenue because they've never sold anything, not a product or a service. And looks like they're losing net income. And that's not great because look at that. They used to have like more assets than liabilities. Now they have a lot more liabilities than they do assets. So I would be careful about that right there. But the fact that they're revenue-less with that not great balance sheet scares me a little bit. Oh, and Lyft as well. Another thing about Lyft is that Lyft does not have their own autonomy taxi service, but Lyft just partnered with Google's Waymo to offer autonomy driving cars. Hey, Filippios, thanks for the roses there. That's really a joke of a stock. You know what? We can cover it. I don't want to get too political here, but yeah, the DJT stock, thanks again for the roses. We'll cover it. This is basically revenue-less. You just don't want to buy this. Like the revenue is $800,000 a quarter. So it's basically a revenue-less company making $800,000 a quarter, losing 20 to 30 million. Like this is just definitional like momentum play. No fundamentals, just hope for momentum. It should not be worth anywhere near 4.8 billion. But that probably wasn't the answer you were looking for. I do apologize there. If you got another stock you want to look at, let me know. I'll happily help you out there. But yeah, that one's not great. It's pure momentum. You can still make money off it, but not a good fundamental play in my opinion. So let's see here. Yeah, Finning stock. Okay, so this is FTT. It's a Canadian company, so we're not actually even available. Uh-oh. Did I just unplug my mic? Okay. So here's FTT stock. They're at an all-time high pretty much. So yeah, congrats if you own this company. You got to be up on your position. But let's convert their currency from Canadian dollars to USD just so we can understand the business easier. So yeah, 55% of the revenue comes from Canada, then Chile, UK. The revenue is only up 1.3%. That's not great. Revenue's up 1.3%. But that net in... Oh, wait. Their net income is really only up by 1%. So we really want to see more growth come back to this business. Fidelity actually is the largest shareholder. Fidelity owns 9.3% of the shares. So anyway, interesting. What's this app? By the way, if you want to get this app I'm on, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So, yeah. If you sign up with my affiliate link and deposit $100, I think we'll both get like a fractional piece of NVIDIA, like $20 worth or something. So let's look at KVU right here. KVUE. This is the spinoff from Johnson & Johnson. And I wonder what they own. Let's go check it out. They actually haven't been doing too well recently. Oh yeah, from the news of the vaccine stuff, probably. I don't remember, but let's see. They are in self-care, essential health, and skin health and beauty products. Yeah, the beauty products are down 4% year over year. Self-care business is down by 4.8%, and the essential health is down by 3%. So all 3 businesses aren't growing. That's not great. So yeah, if we go to combine that, total sales are down by 4%. At least profits are still good. Yeah, they're really making 300 to 400 mil of profits. So they have good net income, but I just want to really see the growth come back. Sales are just on a D trend right now. So you get a dividend. Oh, wow. You get a 4.5% dividend. Wow. So there you go. Any thoughts on USAR? Is that another rare earth mineral? Oh, hey, yeah, we just looked at that one. USAR, I'm holding December 25th. Wait, that is the one we just looked at, right? USA Rare Earth. Yeah, we literally just looked at this stock. Yeah, I didn't really see much in this company. Again, revenue list, no data, a lot more liabilities than assets. I'd probably buy like an MP Materials over that one. But I don't know if they have some like products down in the pipeline or some revenue coming in 2 years or something. I don't know. I know MP Materials does. So what is, oh yeah, Gemini, I forgot to get to that one. So honestly, I don't love this one. It's like a mini Coinbase, and I'd rather own Robinhood. Like I'd rather own like a brokerage business, like a Robinhood, a Futu, and Interactive Brokers, than Gemini Space Station. They're a small company. They're worth $2.8 billion. And again, they just IPO'd, so we don't get too much data for this company. Or actually, unfortunately, the data that we do get shows that their sales are declining. It's down by 7.7% year over year. They're losing a lot of net income, more liabilities than assets. I'd probably rather go with a Coinbase than this stock right here. But we got to wait more for them to actually have some numbers. So yeah. TTD. Oh yeah, the trade desk. Yo, so this stock I sadly think could go lower. I feel so bad. Like all the past stocks I've been looking at, I've just been so bearish on. But here's the thing. Like this company still trades expensive. Like even after this huge decline that they've had, the trade desk still trades at 53 times net income. Pretty expensive valuation. It's okay to have a high valuation as long as you're high growth. And the growth is showing a little bit of red flags right now. So if we go to the, what were the expectations? So this quarter, they beat on revenue, they beat on net income, and they beat on EBITDA. They beat by like 3-4%, but still it's a beat. The revenue is up by 18 and the net income is only up by 6. So that actually means their net margin declined by 11% year over year. So not great. That might be why the stock fell, the margin collapse. I wonder what happened there, but, they're losing like a lot of customers. Like they lost Netflix. Like they're seeing some increased competition. Like Roku and Amazon went to a huge partnership, and Netflix used to use the trade desk to find their advertisers, but now the trade desk, now Netflix goes with Amazon instead of trade desk. But that one still, there's a lot of value to that name. They're still printing net income every quarter over 100 mil, but I think the valuation is still too high, and I think it might go a little lower before higher. But I hope it doesn't. And what up, Vicky said, Grab Holdings. Yeah, this is a great company in my opinion. Do you recommend MP Materials then? I don't know if I recommend it. I don't recommend anything. Of course, none of this is financial advice. Yeah, I wouldn't, I don't think I'd own MP Materials just because a lot of the good news have already been priced in, and it's going to be a while for them to have revenue. So you're just holding the bag for a while. But that's a long-term play. But here's Grab Holdings right here. And I wouldn't buy MP Materials. Okay, here's Grab Holdings, or not at this price. So here's Grab. This is an Uber competitor. They do everything. They do exactly what Uber does, but in all these other countries. Like notice the US and Canada and the UK isn't on here. They're in Malaysia, Indonesia, Singapore, Philippines, like all these other countries. And that's what I love about them, the international exposure to these other countries. They have a really good balance sheet. The revenue's growing. The revenue's up 23. They're net income positive. They're making net income every single quarter. Yeah, look at that. For the past 4 quarters, they've made net income every quarter. The free cash flow is positive every quarter. So I actually really like Grab. And also, they're backed by Uber. That was the most genius part. Uber now owns 13% of the entire shares. And that's what was so genius. Uber took a 13% stake in there for the international exposure to all these other countries. Gave them instant international diversification. And the Netflix. Yeah, hey, what up, Malik? Anthony said StubHub. What is StubHub? Did they just IPO? So yeah, they did just IPO. I don't know what this is. They're a $6.8 billion company. Again, these IPOs, we don't get much data for them because they literally did just IPO. But let's see what the revenue is and what do they sell actually. So internet content and information, online ticket selling service. So StubHub sells sports tickets or concert tickets and that kind of stuff. So anyway, they're like Live Nation. The revenue is down by 3% year over year. Lost net income. Maybe it was an IPO fee or something. Anyway, I there's your ticket play, I guess. Isn't Live Nation also a publicly traded stock? Um, Man, Live Nation is another ticket company. Oh yeah, thanks for that, Frank. Okay, so I know months ago you predicted the top SMR that has changed it. Has that changed? You had predicted the top on small modular reactors. Has that changed at all with the huge price fluctuations? SMR stock. Yo, that's the small modular reactor nuclear company. So yeah, basically, if you look at Oklo, a lot of these have just been on some crazy momentum. And I certainly think these are just not worth touching. Like if you look in the top right, this is a $13 billion name. Oklo the most. Oklo is the most bubbly of them all, but because this one kind of just got their first ever customer deal. Because look at this, the revenue went from 400,000 to 34 mil. So these year-over-year growth rates are really good, but they're still way too tiny for it to justify their current market cap. They're up 22% on Friday. Oklo is up like 35. It's just too high of a valuation. I'd be super careful with them. But even though I wouldn't touch them, like they could still do great. Like there's so much momentum around these names. Like even the quantum names, like qubits. I've been saying, hey, don't buy QBTS, don't buy RGTI, but they still do good anyway, just because of how the market, like the literal stock market's at all-time highs. The QQQ, the S&P 500, all-time high right now. So I'm not shocked to see these like kind of trash momentum names kind of doing good. Like what we're seeing is like a lot of these stocks are propped up on like Tesla and Palantir's Bitcoin's momentum. Well, what up, Dave, man? Thanks for the gift there. I do appreciate that. He said EQIX. Let's check it out. Is that Equinox or Equifax? Or yeah, here's Equinix. I believe this is some data center company, and I believe they're a REIT as well. So if we go to the dividend right here, they have a really nice yield, a 2.2% dividend yield. They are a co-location, interconnection, managed infrastructure. How's it growing? So the revenue is up 4.4%. The net income is nice. They're making 400 to 500 mil in net income a quarter. But I think one reason why the stock maybe has been flat for a while is just from the slower sales growth. They're just not too growthy of a company, and they're a REIT. You know, the revenue is growing low to mid single digits. You know, 4, 4, 7, 6. We want to see some more growth come back. But I like that they're extremely profitable. You know, 400 to 500 mil a quarter. Yeah, they're a REIT. You get a nice yield too. You get a really nice yield. But I don't know if that one will really outperform in the long run. Name of the app. Yo, what up, Lexander? Yeah, hey, it's in the link tree in my bio. For you on the YouTube stream, I pasted it in the chat there. But yeah, if you want to get the software I'm on, it's where you buy stocks. It's in the link tree in my bio, the very first link there. My favorite app, you know, to buy stocks. And you know, let me actually go check on these other portfolios. I have these other apps right here. Like I have Webull Brokerage, I have Robinhood as well, but they're just not anywhere near as useful as that other one. I wish I knew about Moomoo first. But yeah, it looks like the Qs are slipping a little bit. Qs are down 0.18. Nvidia's down 0.3. So I wonder how the market will open tomorrow. How's our Roth IRA doing? Roth IRA is up slightly. Nice. What's up in here? SoFi's up 1.4. That's good. Reddit's down 1. Okay. All right. So let's see here. Hope you have a great stream. Hey, I see you, Plasma. Hope you have a great rest of your Sunday. Yo, by the way, if you wanted to follow button, we stream every single Sunday this exact same time. So someone said Sony stock. What up, M? So yeah, Sony, almost everyone's heard of this company, like the Sony PlayStation, Sony Music Group. So this is a Japanese company, by the way. So they are Japan listed. So we're actually going to have to convert the currency from Japanese yen to USD, and you get a dividend. So this company has a 0.5% dividend. And notice that low payout ratio. The payout ratio is only at 10%, so they actually have room to raise their dividend. They trade at 22 times net income, which seems pretty fair. Unit sales of key products. So this is the PlayStation unit sales. Full game software sales. Recorded music revenue. So yeah, they're in the music industry. That's what's so cool about them. I love how diversified that they are. You know, the game and network of services, which is PlayStation, entertainment, technology, music, imaging. Let's actually see how the music's doing. Yeah, that's up 18%. Yeah, then the imaging, like Sony has like audio softwares and pictures revenue. So yeah, they're just so diversified. And if we go to the net income right here, they're just making a consistent stream of like 1.5 to 2.5 billion in net income every quarter. So yeah, I can totally see why Sony's at an all-time high. All right, so Riggedy computing, yeah, in qubits, yeah, those are two quantum momentum companies right there. And I'm seeing IO and Q as well. We got the whole quantum ecosystem in the chat right now. Out of all those, if I had to pick one out of QBTS, RGTI, and IO and Q, I'd pick IO and Q if I had to pick one, and I wouldn't touch any of these nowhere near their current valuations. Like, they're all ridiculously expensive. Where like, it's almost a bubble in my opinion. It's pretty crazy how these quantum momentum stocks are just like shouldn't be anywhere near here. But I like IONQ specifically because they just acquired a business for over $1 billion, which is pretty cool. IONQ completes $1 billion Oxford Ionics acquisition. Basically, IONQ took advantage of the momentum. So what did IONQ do? Well, basically, since the stock is so insanely overpriced, they diluted the shareholder. They issued a bunch of shares and just bought a company with it. So they're playing the game right, but wouldn't touch any of these names. And whenever they do go up, they'll offer shares, and they'll go all your gains. So yeah, you trade those. So basically, point being, with QBTS, IONQ, you trade these. You don't just buy shares and never sell them like you would Apple or Google. You trade that stock, in my opinion. Zeke said GUTS. Is that a stock right there? So this is Fractal Health. We don't really cover these kind of stocks. We won't really cover the stock. The whole company's worth $40 million. It's a $40 million penny stock worth 90 cents. That's revenue-less. So they're a revenue-less company. This is from 2024. The most recent quarter was 0. So yeah, we're just not going to cover this company. What's the net income? Dude, this company's just going to continue to climb lower. I mean, everything here is headed in the wrong direction. They're losing 20 to 30 mil a quarter. Look at this. They used to have a lot more assets than liabilities. Now they have more liabilities than assets. Yeah, the $49 million company, they just lost 20 mil. The 20 mil, like, legit, that's going to 0. So, everyone telling me about Lucid ticker symbol. Yeah, hey, I'd stay away from Lucid. That is a money burning machine. But here's a stock I actually do like. They do lose money, but I like this one specifically for their growth. So here's SoundHound AI. I would still be careful with this one. I wouldn't have it as a huge position. But here's what, if you own this stock, there's one thing you want to watch specifically, and that's their subscription service. I love subscription model companies. It's all reoccurring. It's predictable. And check out the growth here. Like, this used to be a nothing burger. The revenue was $400,000 a quarter, nothing. But now in the most recent quarter, it's 32 million, up 781% after going 780. Like, the growth is insane, where it's beating expectations. Like, the analysts expected 32 mil. They reported 42 mil. That is an insane beat on the revenue. So this one's still a money loser. They're losing 40 mil a quarter basically. But I like them for the growth. Insane growth. NVIDIA used to own them, and then NVIDIA sold them. What stock is this? Oh, we were just looking at SOUN, SoundHound AI. By the way, if you missed anything, I'm streaming on YouTube, and you can replay it. The stream stays up forever, so a lot of people just they miss the stream, they can watch it on YouTube after. But by the way, that's the number one way to support me. Best way to support me is subscribe to my YouTube channel. I'm trying to build up my channel over there. Hey, what up, Germany? He said, picked up Sony and Grab. Hey, nice. Hey, I do like those companies. Sony, you might pay an ADR fee. I know they're a Japanese company, but they're a great asset down. If you play on PlayStation, every time you buy a game through the PlayStation, you have to pay like 30% more money. And that just goes straight back to Sony as a legit royalty. Kind of like on Apple. If you go to the Apple App Store, you pay $100 on gems or something. $30 of it goes back to Apple. So Big Let me get my water here. I'm so sorry. Oh, much better. So here is Fiverr right here. Does anyone remember that Fiverr website where you buy stuff for $5 or something on their website? Let's see how the business is doing. I am curious. So the revenue is up 14%, not too shabby. They are net income positive every quarter, so that's good. I mean, 3 mil. Wait. So do beware. Look at this. When we look at the actual operating profit, every quarter the operating profit is negative, but the net income is positive. This tells me that they're making interest on their cash. So if we go to the income statement, yeah, look at this. They're legit making $7 million of interest a quarter. And interest is not included in operating profit, but it is included in net income. That math legit works perfectly. They lost $2 million, but they made $3 million of net income. That $3.2 million in net income came from the interest they're making. So it's a business that loses money every quarter, but they have so much cash on hand apparently. All right, I like the growth. The revenue is up 14. I just be careful with that name. So EOSE is on an uptrend since 80 cents. All right, what is EOSE? Let's see. So the stock's actually done very great the past couple weeks here. Look at that. That's crazy. Let's see. What's the market cap? They're a $2.7 billion market cap. They're in product revenue. So check this out. The next 6 months are going to be extremely crucial for EOSE. So check this out. The revenue is 15 million this quarter, but look at what the analysts are expecting the next couple quarters. 40 million, 82 million. You know, the sales are literally going to go from 7 mil to 81 mil, an over 10x increase. So really watch out. The next 6 months are going to be extremely volatile for this company. It looks like it's really pricing in a lot of this growth that's expected the next 6 months. So that should be really interesting. This does look a little concerning. They have way more liabilities than assets. They lose a bunch of net income every quarter. But again, it's this future growth expectation that's insane. So watch out for the next 6 months. It should be extremely volatile. Hopefully that was helpful there. What's the reason for the NASDAQ and Bitcoin nasty dump right now? I don't know. Let's go check it out. What a Bitcoin nasty dump. Is that true? What is Bitcoin doing? Oh, wow. Hey, look at that. That doesn't look good. Did Michael Saylor sell? Right. Bitcoin. Come on. There we go. Down 1%. Not the end of the world. I mean, it went from 115 to 114. Let me go check the NASDAQ. NASDAQ and QQQ, or the QQQ and Bitcoin sometimes rhyme together. So yeah, there's the NASDAQ down 0.16. Not the end of the world. Yeah, Apple's down or trending down. Tesla's up 2%. SoFi's up 1.25. Anything else? Not really. So yeah, here's our portfolio. It's basically down 0.0. Constellation Energy's up 0.5%. Nice. I love CEG. All right. So, what is this stock? Probably because of the new H-1B visa costs. Oh, I heard that hurts Google a lot. You know, Google, I was reading an article. They have 14,000 employees. They have 130, like legit 13% of their entire workforce is on this new, they have to pay like $100,000 visa thing. I don't know. That should be interesting. I don't know if it, I don't know. I heard someone say it doesn't affect existing employees, but it eventually will, or I don't know. I haven't looked into it too much. So CVCO stock, what's this one? So this is Cavco Industries. Wow, they're at an all-time high. So yeah, congrats if you own this stock right here. $4.4 billion company. They're at an all-time high. Factory built housing. So they maybe pre-build houses in a factory, or I don't know. That maybe we'll look into that or something. They're growing nicely. Double-digit revenues up 16, and the net income is up 50. So they actually grew their margins. Yeah, it really did grow 50%. That's some nice margin expansion. So yeah, they're making pretty much 40 to 50 million of after-tax net income a quarter. Insanely good balance sheet. The liabilities are really low. The cash from operations is positive every quarter. No dividend, but that's very much all right. Yeah, and they're trading at 24 times net income. That's probably fair for the industry that they're in. Factory built housing. I might look into this company anymore, or I might look into this company more if they like see what they do, like build houses, and I don't know. Can you go through your portfolio and explain, or hey, here's my portfolio right here. By the way, if you want to see my entire portfolio, check out my YouTube channel. I do stock portfolio updates all on there all the time. I have too many portfolios. I have 1, 2, 3, 4 different portfolios. Like I have my my growthy portfolio that everyone loves. You know, this portfolio has gone insane. We're up 17% all time. This has underperformed the market. We're only up 17% all time in here. Yeah, we have some crazy winners in here like Reddit, Dave, SoFi, Futu, Robin. Wow, we're almost up 800% on Robinhood now. SoFi as well. Wow, we just hit for the first time ever. We're up 400% on SoFi. But we do have some losers in here as well, like UiPath, Sprouts Farmers Market. Sprouts Farmers Market looks like a pretty interesting grocery store. stock. But another grocery store that's really popular is COST, Costco. And hey, Tingrico, hope you're having a great Sunday. How's it going? Yeah, here's Costco right here. I'd love to own this stock. I really would. But the only thing holding me back is their high multiple. And I think they're just always going to trade expensive just because they're such a great, well-run business. But yeah, let's go check out Costco right here. You know, you have to have a subscription to get into Costco. So even if you don't go to Costco, they're still getting that subscription revenue every month. And whenever you buy stuff there, you're getting a good deal because you buy it in bulk. And check this out. This is their after-tax net income. They're pretty much making, if you average it out here, like $2 billion in net income a quarter, get a 0.5% yield. This is a perfect stock to legit just buy and never sell. I would love to own Costco, but the valuation is just too high, unfortunately. So the cheaper version of Costco is SFM, Sprouts Farmers Market. So that's why I've been buying that one. Hasn't been doing too well. We're down 12% on them. So yeah. Yeah, no problem, Farm. Hey, I have a 401k and I can use some of that money I have in there to buy stock. Which ones do you recommend? Yo, first off, that's awesome, man. I recommend again, none of this is financial advice. I don't recommend anything, but like I would have most of your portfolio in just the S&P 500. Ticker symbol VOO is the S&P 500. There's many other tickers for the S&P 500, but yeah, it breaks your money up for you into the top 500 companies by market cap in the US. And then I would buy some of the companies you use every day individually. Like if you use an Apple or if you're on Microsoft 365, you pay for that subscription. You're locked in the Apple ecosystem. I'm on an Apple iPhone. You pay for Amazon Prime. You're on Instagram, so you buy Meta. Google, you love YouTube, so you buy Google stock. Like invest in what you know and use, and that's legit what I do. You know, I own all those companies. I own Meta. I own Google. I own McDonald's. I own Constellation Energy. We have our utility bill is through Constellation Energy. So why not buy some of our utility company that we pay a bill to every month? So let's keep going here. Yo, what up, Jack? How's it going, man? Oh, UTHR. I love this stock, actually. This is United Therapeutics. They had an insane gap up. There was some really good news on this day. Let's go figure out what it is. This is a company I've always said good things about this stock. So even though they're at an all-time high, they're still only trading at 16 times net income. You know, that's still a pretty fair multiple. And they sell a bunch of different prescriptions over here like Tyvaso. This one's growing very nicely, just hits a record every year, every quarter. Nebulized Tyvaso, that's up 10% year over year. So yeah, if we go to their net income right here, they're printing money. They're making over $300 million of net income every quarter. And the whole entire company is only worth $18 billion. So yeah, they're trading at 16 times net income. Really fair. Lol, I have a Sprouts Farmers Market right next to my house, and I've never been there. Yeah, they're like maybe go buy some fresh produce over there or something. What broker is this? Yo, this is a brokerage. It's in the link tree in my bio, the very first link there. It's a brokerage called Moomoo. But yeah, it's where you buy stocks and stuff on. Yeah, my favorite brokerage to buy stocks on. Most useful one. So let's see here. Ooh, so yeah, we were just talking about this stock. You know what? We can look at Meta. So obviously they own Instagram, Facebook, Threads, WhatsApp. They actually just introduced ads to WhatsApp. So there's now going to be ads on that. That should be a very nice earnings tailwind. Did anyone see the Meta glasses like release a couple days ago? Where the live event messed up, but yo, the Meta glasses looked very cool. I think that's a very nice business for them to be into. They took a 3% stake into Ray-Bans, the Ray-Bans parent company. So they bought some of that stock. But yeah, check this out. This is a Mag 7 stock trading at 28 times net income, a 28 PE. That seems pretty fair. Like I really feel like this could stretch up to like a 30 PE before it really maxes out. Send this to over $800 a share. You can see their active users. This is insane. They have 3.48 billion daily active users. So, you know, half the world is pretty much on one of their apps a day. Instagram, Facebook. And if we go to this right here, this is insane. The profits they're making 18 to 20 billion in net income a quarter, growing faster than the sales. Like they're expanding margins. Revenue's up 21, but net income's up 36. So yeah, that means they're expanding margins. 40% margins for a $2 trillion company is insane. They just print money. Yeah, Mark Zuck owns 13% of this company. That's how these billionaires get so rich. Like Mark owns 13% of a $1.96 trillion company. So then he just takes out a loan against his stock, and that's how he gets his salary. What about Moomoo stock? Are they listed? So yeah, hey, so this app I'm on right now, this brokerage I'm on right now is publicly traded, ticker symbol FUTU. So they're kind of like a Robinhood competitor. So yeah, this brokerage I'm on, this app I'm on right now, this is their stock, ticker symbol FUTU. So again, even if this brokerage went bankrupt, if this app I'm on right now went bankrupt, you'd still be FDIC insured for $250,000. But that risk is nowhere even near close. This company, it's good to see that the company that you keep your money with is doing great as well. They're printing money. They made $330 million in net income. They have ridiculous margins. So the revenue is up 69, but the net income is up 111. So that means they're growing margins. They grew their margin 25% year over year to a 48% net margin. You can see their number of users. They have 27 million number of users. Assets are at a record. So yeah, they make their money from commissions and interest income. So yeah, their interest income is soaring up 43% year over year. I keep my interest on this app here too. Check this out. If you look in the middle of my screen, I have $1,000 of cash, earned you a 3.85% APY. They also make a little bit of APY on top of the money that I make. So yeah, anyway, I like this. I do own them, by the way. I do own FUTU. So yeah. And if you want to get this app I'm on, again, it's in the link tree in my bio, the very first link there. Hey, what's your monthly or yearly return? Well, I have multiple portfolios, so I guess for this portfolio, the 1 month return is a 10% return on a money weighted average. And what was that yearly return? The 1 year return is 70. This year has been insane for me. We are up 72% in this account, and the S&P 500 is only up 16. That's mainly been from Comfort Systems. We literally just bought this stock during the April dip down here, and ever since then, it's just been up and to the right. And not just that company, but all our other ones like Powell Industries. This one, just we're up 3x on them. Amphenol Group's another one. We're up double on this one. I mean, the market has just gone insane. So yeah, you didn't even have to buy the dip in April. If you just didn't sell your shares in April, you're doing very well. Actually, here's another thing. If I go to this on the 1 year, so here's the 1 year. Look at this. We were doing just as bad as the market. Like, look, we were down at one point. We were down a little worse than the S&P 500. Look, we were down 12.9. The S&P was only down 11. But since that dip, we've insanely recovered. We're up 72%. So anyway, that's why I like picking and choosing individual growth stocks. I mean, I think you can outperform the S&P 500 by pick and choosing your favorite growth companies that actually like you can trust with good financials. So what up? Juan said RMCF. What is this stock right here? Rocky Mountain Chocolate Factory. So this is kind of a junk of a stock, unfortunately. I've looked at them before. For some reason, so if you look in the top right, this whole entire company is worth $15 million. So it's pretty much not even worth talking about. $15 million company. The stock is lower than it was in 2001. So they just burn through money every quarter. The sales are flat / declining. Nothing's really blowing me away here to really want to own the Rocky Mountain Chocolate Factory. Is that a restaurant or what is this? Food and beverage, international franchise of chocolate and confection stores. All right. Anyway, wouldn't touch that stock, to be honest with you. Too bad I can share mine to get you to review my picks. Hey, what up, German? Let's see. What do we want to cover here? Rohan said AMD. You know what? Let's cover AMD. We haven't looked at them at all today. We haven't even looked at Nvidia today. So let's pull up AMD. I do own them, by the way. Full disclosure. I don't want to. Here we go. If I go to my largest holding in here, AMD is our largest holding in this portfolio, of course. But it's worth $1,700 in that account. Here's what I like about AMD. The valuation is a bit high here, but check out their GPU market share, a 17% PC GPU market share. Another big growth driver for them has been their data center business. You know, data centers need GPUs and graphics card, and AMD happens to make their own graphics cards and can supply them to their own rigs themselves. So that business is growing. And also the fundamentals, like like the profits here. Like the FCF, which stands for free cash flow, it's up 3x year over year, or actually 4x year over year, went from 430 to 1.7. The revenue's up 31. The net income's at a record for the year. It's 872 mil. They have an absolute monster of a balance sheet as well. No net debt. So AMD, I just really like them. Might be biased though. I wouldn't pay its current valuation either. I'd probably wait for them to fall a little lower. So yeah. Do you own AMDW? What is that? Roundhill AMD weekly pay ETF. So no, this is a covered call ETF. I'd rather just own actual AMD. So this sells calls on AMD. And to be honest with you, you don't really, it's like selling calls on Bitcoin. It's going to get called. Like it's the yield's going to be extra high because it's an asset that, pays well, high premium, but it's like chances are that like your shares will get assigned. So I don't love the covered call ETFs for certain assets. Like if I wanted a covered call ETF, I'd maybe go with like a TLTW. It sells calls on treasury bonds, which is a more reasonable thing to sell calls on, but it doesn't have as high as a yield, but still. I've been watching your live since 10 viewers. Love your stuff. Hey, thanks, man. So he said LIDR stock. LIDR. So yeah, their name is AI. Like pretty dumb. Yeah, this is kind of a meme momentum stock. I feel bad, but if you look at the top right here, very small company. They're worth $100 million. I mean, it's a $100 million company. The stock's at an all-time low. It's just a momentum stock right now. And if you go to the revenue, like it's just, in my opinion, it's just hard to really trust this. Like you swing trade this, you do options on it. Yeah, but you don't like just buy shares and hold it for the long run like you would Apple. Like you just can't trust it. Like the revenue is 22,000, a 31% decline as well. They're losing 10 mil in net income a quarter. Their assets are plummeting. Like they lost 10 mil a quarter and the whole company is worth 100 mil. That's 10% of their market cap a quarter. Unfortunately, I'd be really, really careful with that one. So I do not own this PEP. What happened? I might buy the dip. So yeah, Pepsi actually just took a stake into Celsius, which is pretty cool. Pepsi just sold. Oh, I remember this candlestick. An activist investor like bought 5% of the shares. The stock rallied that day, but then it just completely sold it all off, I guess. So yeah, Pepsi, it's a bit boring right now. It's a bit tough. Like it's just not a growthy business. Like I can totally understand why this stock has been flat for a while. So let me just go show you their financials right here. So they're also, this is a main dividend play. Like if you go to the dividend, oh, I might have to reset this app. That would not be good. Yeah, sorry about this lag here. By the way, if you wanted to follow button, we go live every single day on here, and I sell nothing. Of course, I have no course book. So here's Pepsi right here. If we go to the dividend, they have a 3.87% dividend. So you're getting a near 4% dividend yield on Pepsi. But here's the unfortunate part. If we go to the revenue is only up 1% year over year. Like these are low single digit numbers. 1%, -1, 0.2, 0.5, 0.8. Like it's just so boring and slow growth. The margins are falling year over year too, which isn't great, but they're still making $2 to $3 billion in net income a quarter, which is good. The actual net income is worse. It's down 58%, technically on a one-time adjustment. But yeah, Pepsi, it's I don't expect this stock to outperform the S&P 500 in the long run. Like if someone said pick the S&P 500 or PepsiCo, what'll be a winner in 10 years? I'm probably going to pick the S&P 500, but yeah, they're interesting. It's kind of the industry. Like if you look at Coca-Cola as well, the growth is it's basically negative on Coca-Cola. And Keurig Dr. Pepper as well. Man, Keurig or Dr. Pepper is selling Keurig KDP stocks. Yeah, if we look at Dr. Pepper as well, they just tanked. Man, that's insane. Actually, I don't know if they deserve to fall that much. Actually, Keurig Dr. Pepper might be worth looking into. They're splitting off their coffee business again. So, what up? Caleb said, what do you think of Chipotle right now? So Chipotle, I think, might go a little lower. And here's my thought process on that. So I would put this one on the watch list, but I wouldn't buy it yet. Here's why. So if we look at their actual valuation right now, the PE stands for net income multiple. So they're trading at 35 times net income. The industry average is 27. So they're trading at an above average multiple, and that's okay. It's totally okay to have a high multiple as long as you're high growth. But unfortunately, Salesforce or Chipotle is missing on their growth metrics. Like the orange lines, what the analysts expect, they're missing on the revenue. So the revenue, the lifeblood of the company, the sales were only up 3% year over year. That really doesn't even beat inflation. So the revenue is up only by 3%. And the net income is actually down by 4%. So that means their net margin declined by 7% year over year. So that's why I low-key think Chipotle could maybe go a little lower. Like they're trading at a high multiple even now, even after their huge decline. And the growth is stalled like 3% at inflation to that, negative 4% net income. They're still making a boatload of money, 300 to 400 million. So I'd honestly, I'd put them on the watch list. I'd rather buy them than like a Kava. What do you think of GEV? I've owned it for a while. GEV is great, but just extremely expensive on every metric. Like even if you do a 3-year out multiple, still pretty expensive. So that's the only unfortunate part about GE Veranova. But yeah, they're in a really exposed to the PJM auctions, I believe. And yeah, for the past couple of quarters, it's been pretty solid. They're making a couple $100 million a quarter. The revenue is up 11% year over year. Ever since the spinoff from GE Healthcare and GE Aerospace, like the management has really been able to focus on shareholder returns here. But I wish I gave you more thoughts on this one. I really like them. Super momentum. I think the valuations might just be a little too high. So Ford stock, Joshua, Ford, this company, unfortunately, just isn't one you want to own, I don't think. It's a dividend play. So, like, look at Ford. Ford is like 50% lower than it was in 2001. So, stock just hasn't done too well. But here's why people like Ford. Let me get my water here. They have a 6.5% dividend. So that's the one thing investors do like about Ford, a 6.5% dividend. But again, I just don't think this is the kind of company that's going to actually outperform the market in the long run. Ooh, actually, that's not. It says their net income went negative this quarter. If you look at the operating profit, it was actually 500 mil. Still an insane decline. Like it fell 72% from the previous year. Revenue's up 4%, profits are down 72%, net income went negative. I just be like, it's just not a company you want to own. I think it's just not that quality. Okay, so what up, Monkey D. Luffy? He said WBT in stock. Webtoon. Yo, actually, Disney just took a huge stake into this company. Or not a huge stake, but they bought like 2% of the business. So yeah, looks like they issued new guidance as well. So Disney and Webtoon expand partnership, which is pretty cool. Let's see how they're doing right now. So revenue is, look at that balance sheet though. They actually have a pretty good balance sheet, which is good news. The revenue is up 8.5 and they're barely losing money. They are still losing money every quarter. Dang, like 100 mil that quarter isn't great. So we do want to see them start to hopefully narrow these losses here. Let me see. Use, what up, dude? Thanks for the roses there. I appreciate that. Yeah, $2.8 billion company. Still a really small company, but it's really good news to see Disney take a stake into the stock. They're going to be doing a partnership with Disney too. So that's why the stock gapped up so much on earnings. I own Disney, by the way. All right. Ford has lost 50% in 24 years. Talk about a Titanic. Yeah, German. Unfortunate. I bought PTLO, not looking for a bullish run anytime soon, but I think they're at the bottom. So this is Portillo's. I think this is like a pizza company or something, a food stock. And unfortunately, yeah, the stock is at an all-time low. Let's see what they do again. Let me just double check. So restaurant, yeah. So they're a restaurant business, which if you look at all the restaurants right now, Wendy's, Jack in the Box, they're all doing terrible. Yeah, look at that. They just huge miss on revenue. They're expecting 195. They only reported 188. They did beat on net income though slightly. Yeah, so good news. They're still, if we go to net income, they're still net income positive, making nearly 10 mil a quarter. But yeah, the revenue is only up 3.6. Honestly, this one could have bottomed. I don't know. Yeah, if we look at some of these other restaurant stocks like Wendy's, for example, did y'all know look at Wendy's as well. Wendy's is pretty much also at this new like 52-week low, all-time low level. If we look at Jack in the Box, which acquired Del Taco, like look at Jack in the Box. I mean, all-time low on this stock as well. Like the restaurants just unfortunately aren't too great. What dividend stock would you recommend for an IRA? Yo, Tommy, great question. Yeah, a dividend stock I'd recommend for a Roth IRA is the two that I'm actually going to recommend two here. Again, not financial advice, not personalized advice. I'm not really recommending it, but I would buy MAIN, Main Street Capital, and IRM, Iron Mountain. Iron Mountain has a 3.3% dividend, and Main Street Capital has a 6.5% dividend. And Main Street Capital actually pays you monthly. So they're one of the few stocks that actually have a monthly dividend. And I've looked into both of these stocks. If you go watch my most very recent YouTube video, I do a deep dive into both of these companies, both MAIN and Iron Mountain. It's my most recent YouTube video. I do a full analysis on both of them, and I show why they're safe and perfect for a Roth IRA. So yeah. All right. So stay away from food service IMHO. Yeah, I agree with that. You know, the one stock that, and it's not really a food service company, is McDonald's. I actually just bought another share of them on Friday on September 19th. I bought another share of McDonald's at 301. You know, McDonald's is a perfect, buy and never sell stock. They're actually in my eyes, they're recession proof, but they're really recession resilient. In a recession, McDonald's acquires a bunch of cheap land. McDonald's is really a real estate royalty company. If you go spend $100 at any McDonald's, $4 of it goes back to the stock parent company as a royalty. High margin, legit 100% margin royalty, and McDonald's owns the real estate under 80% of all the stores. So even in a recession, the tenants are still paying rent to McDonald's, and McDonald's still gets the high margin royalties. That's why they have like 30% net margins. What restaurant in the world has 30% net margins? None of them. That's because they're not their business model isn't owning the restaurants. It's owning the land and collecting royalties from every franchise. So yeah, if we go to McDonald's right here, they're a nice dividend play too. If we go to their net margin, and McDonald's has a 33% net margin. Pretty crazy for a restaurant. Repeat those words again. Oh, hey, forgot what I said there. Yo, by the way, if you missed anything, I'm streaming on YouTube as well. So if you want to, sometimes I talk too fast. I do apologize there. So if you ever missed anything, want to replay the stream, it's on my YouTube channel. My YouTube channel is called Nathan Robert. You can just type into YouTube and Nathan Robert, but it's also in the link tree in my bio. But yeah, I'm streaming on there. If you missed anything, you can replay it. That's the number one way to support me. Just subscribe to my YouTube channel. I'm trying to build up more subscribers on my YouTube channel. So yeah. Let's see. Let's look at a few more stocks here. I'll probably look at a couple more stocks, and I gotta go. But yeah, appreciate y'all being here. By the way, if you want to hit the follow button, we stream every Sunday at this exact same time. We stream every Sunday twice, so we do 2.5 hour streams every Sunday. We stream every single day. I sell nothing. I have no course book. Here's unfortunately a stock that I think is going to go lower and lower and lower. And I feel bad about if you own this one, but yeah, look at Wolfspeed. They're a $348 million company. Kind of remember that. The whole company, again, is worth $348 million, and you're buying a business that legit lost $670 million in net income this quarter. That's 2x the entire business market cap. $285 million last quarter, $370 million. Like, this company has real bankruptcy risk. And I think it's, I'm going to recommend you don't put your hard-earned money into Wolfspeed. Again, none of this is financial advice. I don't recommend anything. I don't know your situation, but this is not a good fundamental company. It's just math. It's just numbers. They lost twice their market cap just in the most recent quarter, all for a business that is declining. The revenue's down 1.8. They now have more liabilities than they have assets. So I'd be really careful with Wolf. Yeah. And someone said Wolf will be my first short. That's the thing. It's easy to short these kind of names, but there's always like this weird little, you short the, it should always trend down and go to zero, but with you'll sometimes get these little moments where it just momentum's up. So I've never shorted anything, but I just stay away from those trash. Yeah. Sometimes it's okay to sell your losers. You have CSL. Nice. Yeah. Rivian. I love Carlisle. Ash said BBAI. It's running like wildfire. Let's see. So the thing is, this one has kind of just been following the momentum of some of the other names. This one has no real financials. And what we've really seen right now is companies with no fundamentals, no financials are just momentuming. And that's just because the market's done great right now. The stock market is literally at all-time highs right now. QQQ, SPY, all-time highs. Palantir, Tesla, some of these insanely high valuation names just continue to go up and it's propping up all these smaller names. But here's why, if you're just looking for a stock to just buy and hold for the long run, I don't think Big Bear AI is one you want to touch. Like if we go to the net income, like here's the tough part. Let me go to the market cap again. Remember, this is a $2.5 billion company, and they lost $230 million in net income this quarter. 61 mil last quarter, another 150 million. They're losing all this net income, all for a business that is declining. The revenue is down 19% year over year. So we kind of want to see the growth come back. They're also diluting you, but they're also doing the smart thing. That's how they beefed up their balance sheet. They diluted you by $300 million this quarter. They issued 288 million of shares this quarter, but it beefed up their balance sheet. They kind of had to do that to help out with this huge $230 million net income loss. But anyway, that's a tough buy. Declining revenue, insane net income losses. I think it's just propped up on momentum right now. So let's see. Rich Tech Robotics is another one I'd stay away from. Another revenue list kind of. And again, there's money to be made on these. Like in a bull market, these just keep momentuming higher and going up. But if you're just looking for like these kind of companies, like a Google, an Apple, a stock to never sell, those are different. But here's Rich Tech Robotics. This is a robotics company with basically no IP, no patents. They have one revenue list NVIDIA partnership, but this is a $700 million company. And remember that this is a $700 million company. Like look at the revenue here. It's just so hard to trust these, in my opinion. Like the revenue is $1 million a quarter, like literally $1 million. And they're losing a couple mil a quarter. They're another company that's been taking advantage of the momentum and issuing shares. Like how did their assets go from 57 mil to 107 million in one quarter without the liabilities changing at all? Well, they did the smart thing and diluted the shareholder by $50 million to beef up their balance sheet. Yeah, that's almost perfect math. Diluted you by 51 mil. Assets went up by 51 mil after subtracting the little net income loss. So I just can't trust that one. If I'm looking for a real robotics company to buy and hold forever, check out a Symbiotic and SYM. This is like a real good, they have over 1,500 registered patents. Their largest customer is Walmart, and Walmart loved them so much that Walmart took a stake into this company. They have a 13.5% stake. They're also super growthy. Rich Tech Robotics, $1 million in revenue a quarter. Well, here's one that actually has good revenue, good growth too, that I think it's more justified to, this is a pure robotics play. Like Amazon is the number one robotics play out there is Amazon, but it's not like a pure play. Like you're getting a bunch of other businesses as well. But yeah, look at this. The revenue's up 25 after going 50, after going 77, after going 166. Like the growth is insane on Symbiotic. They're still losing like tiniest bit of money, but the losses are narrowing. Would you buy CSL here? I actually totally would. Actually, if you go to the very beginning of the live stream on my YouTube channel, like you can replay it. The very first stock I look at is CSL Carlisle Group. I do a full analysis on this company just because I own them. I like them. I'm barely up on them, by the way. If I go back over here, look at CSL Carlisle Group. We are only up 1.75% all time. They've been raising their dividend for over 49 years. They're a share buyback monster. They've bought back like 25% of all their shares since 2019. Insane. So yeah. What up, Beatish? He said AMCR. What is AMCR? This is Amcor. The stock is, they just gapped down on earnings. So if we go look at their earnings report, I expect it to probably not look great. So yeah, they missed on revenue. So that might explain why the stock had a huge gap down. Analysts were expecting 18 cents of net income per share. They actually went negative net income this quarter. That was a surprise. So they missed on every metric. They missed on revenue, they missed on net income, and they missed on EBITDA. The revenue, okay, actually, we can kind of give them the benefit of the doubt here, though. I didn't realize that they just went through a merger. So look at this. The assets went from 18 billion to 37 billion. Here's how you check that. We go to the cash from investing activities. Yep. So they just bought a business for 2 billion. So this revenue growth up 43%. So the net income they normally make 200 million net income, but after they did probably some merger and acquisition fee, it's honestly not the end of the world here. It actually might be worth looking into, but I'd be careful. So BlackBerry stock, yeah, I don't buy BlackBerry stock. That one's a meme. Not really any good financials there. Oh, hey. Or actually, what up, Spencer? He said SES stock. This is like an Amazon. Or wait, no, it's not. Never mind. Actually, we're not going to cover this company. This is another one of those momentum companies. They're a $500 million stock. Riggedy still a semi-meme play. Yeah, you know what? Actually, let me look at that one instead. Let me look at RGTI here. So it's another company that, it's like Qubits, for example. That one is super propped up right now. Well, RGTI. Maybe we can't find it. Sorry, let's see. RGTI. Well, maybe we won't look at it if it doesn't want to load here. Okay, there it is. RGTI. Yeah, look at that. All-time high pretty much on this stock right here. A $9 billion market cap. So I know a lot of $9 billion companies out there. I know what the financials of a $9 billion market cap company should look like. Let's go check out Riggedy Computing. I mean, the future story you're buying here at this market cap, like, it's insane. Like, it's so bubbly. Like, the future growth you're buying here, like, upfront paying for right now is like too much to pay. Like, if we look at this, the revenue is down 41% year over year. The revenue is only $1 million. Someone said RGTI is the future. It could be, but I mean, like, revenue is 1 million and it's down 41% year over year. And the analysts are expecting the revenue to go to 2 million. I mean, again, at a $10 billion company with 2 mil of revenue a quarter, losing net income every quarter, 20 mil. They've been able to beef up the balance sheet just like all the other names by diluting you, issuing shares. But I just can't trust that name. Hey, what up? Slay said, what are you using to look at this stuff? Yo, by the way, yeah, I'm on a brokerage right here. It's where you buy stocks on. So yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Thanks again for the rose there, Slay. And someone's just got a government contract. Oh, that's kind of cool. Riggedy Computing just got a government contract. I wonder how much that's worth. And Ting Tang, thanks for the chili pepper there. I really do appreciate that. Yeah, hey, someone said OKLO stock. You'll hate it. Yeah, exactly. Yeah, that one is one of the harder ones to buy. So here's QuantumScape. I believe this is another revenue-less company. Like, why are we looking at all the revenue-less stocks right now? Like, if we go to QuantumScape right here, like, if we go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service, and they lose over 100 million of net income a quarter. So I think this one is propping up on the MP Materials deal and stuff. So, and just the normal momentum of the market with the stock market, S&P 500, QQ at all-time highs. But yeah, I just be careful with this name just for the simple fact that they're revenue-less. They don't sell anything. They lose 100 million net income a quarter. But whenever they do start having revenue, as they transition from revenue-less to finally selling something, there should be a lot of volatility around that time, and maybe it'll rocket up. I don't know. So, all right. NVO, strong growth with relatively low valuation. So yeah, hey, what up, Helpful? One thing I think is really weighing on Novo Nordisk's valuation is the fact that they lose their exclusivity for Ozempic. So what does this company do? What is Novo Nordisk? It's a weight loss company. They own Ozempic. You know, Elon Musk is on Ozempic, and they own Wegovy. And that's most of the revenue. 93% of the revenue is their obesity care products, but they actually lose their exclusivity for Ozempic in about 2 years. So that's why the multiple is so low and so compressed right now compared to the industry average. You know, they trade at 15 times net income, and it's not going to load here, but like the industry average is, they're at 23. So anyway, the actual right now financials, you're right. The right now financials are insanely good. Like they did they're doing 4 billion easily plus a net income a quarter. You get a 3% dividend with Novo Nordisk, easily sustainable. But it's that future uncertainty that I think is really weighing on the stock price. But honestly, I think it's overpriced in. I think it's actually worth putting on the watch list and worth looking into. They're like what revenue-less companies? Oh my gosh, they're burning through. Yo, what up, Rain? Yeah, some of these are tough buys. I mean, I just stay away from those companies. For the most part, you know, general rule of thumb, like just look for other companies out there. If a company's revenue-less, burning through a lot of net income, Like, I'd probably just stay away from it. Just look for other companies out there probably. Hey, no way. Hey, Tangrika. Shout out to Tangrika for the 28 roses. Yo, I really appreciate that. If you got a stock you want me to look at, let me know, Tangrika. So Lucas said TR, is that Teradyne? Oh, and then we can look at DHR, DR Horton. So here's Teradyne. Yeah, the stock is the same price that it was back in 2020. Is this like a software name? Is this like a Salesforce competitor? So no, they're not. They're in semiconductor equipment, upstream aircraft components. All right, well, that sounds interesting. Yeah, I like how on Moomoo you can see like the whole like ecosystem breakdown. But anyway, let's see here. Teradyne, semiconductor test. So they do semiconductor testing. That business is actually down 12% year over year. Product test. Let me see here. So total revenue, we've combined it all. So yeah, the revenue is only or it's actually down. Revenue is negative 10% year over year, and the net income fell by 57. So that means they're losing margins. Yeah, the net margin fell by 52% year over year. So one thing we kind of want to see is the growth come back to TER stock, declining revenue, declining margins. Good balance sheet though, really good balance sheet. Looks like the analysts are expecting the growth to come back. Actually, wow, it's going to be some strong growth comps. So watch out for these next couple quarters. Maybe that's what the analysts are pricing in. Yeah, that income's supposed to basically double from this bottom here. Let's see. Ooh. Oh yeah, actually, let me look at DR Horton right here. Yo, Kitten, is that you, Joey? There's no way. Kitten? Are you Joey? Okay, DR Horton, wait, DHR. DHR, this is a company owned by Warren Buffett. He actually just bought the dip on them. This is a home builder, and the home builders always trade at low multiples. I honestly, wait, DHR. Oh, this is Donna here. No, I thought this was DR Horton. Oh my goodness. Okay, so forget everything I said about the home builders. Let's go check out Donna here, right here. So yeah, this is a diagnostic biotechnology company, Life Sciences. How's that doing? Life Sciences is only up by 0.4. Biotech is up 8. Diagnostics is up 2. So it's kind of a slow growing business, to be honest with you. Like the revenue is only up 3.3. That barely beats inflation. So revenue's up 3.3 and the net income fell by 38. Yeah, it really did. That was real. That was a real margin collapse. I do wonder what was the story behind it. Yeah, this is a 1% margin business, 1 to 2% net margins on this company. I would really be careful. A 0.6% dividend yield. You can kind of understand why this stock has been basically flat for 5 years, but yeah, nothing's really blowing me away there. Just too slow growing for me, to be honest with you. Yo, but hope you're having a great Sunday there, Professor Pumpkin. What's up, dude? Ooh, Alekan said TTWO. This is Take-Two Interactive. This is the company that owns Rockstar Games. You heard of GTA 5, GTA 6. This is the company that owns it. And basically, the stock has an asset that they're about to release. Like, they're in such a unique position. They're going to release one of the biggest games of all time. They're going to release GTA 6. And whenever they release GTA 6, it's literally instantly going to bring them in like billions of revenue. So it's really there's so much future growth expected from that game release, which is why the stock has really been anticipating that. I honestly think it's pretty much priced in at this point. I wouldn't touch this one at this current valuation. But yeah, they own Rockstar Games, GTA 5, Red Dead Redemption, all those kind of games. So yeah. Pretty cool. RL, please. What is that one? Oh, Ralph Lauren. Hey, is that the apparel company? No way. Wow. This is an anomaly for the apparel stocks. That's an insanely good looking stock chart. What's the dividend? Even though the stock's at an all-time high, you get a 1% dividend, which is pretty cool. Number of stores, pretty cool. So global concession based within shops. So that actually fell by a bit year over year. Okay, well, anyway, let me just go to the net income. Wow, dude, they're making 200 to 300 million in net income a quarter. These growth rates are insane, especially for this industry. Revenue's up 13, net income's up 30, growing margins. That's actually really impressive. Ralph Lauren, the actual person, owns 29% of the shares. The Ralph Lauren Family LLC. Anyway, that's pretty interesting. It's an apparel stock all-time high. You look at Lululemon, Nike, Under Armour, they're all doing trash. Louis Vuitton. What are you using right now? Oh yeah, hey, this is a brokerage where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's a brokerage where you buy stocks on. So, Driston said Reddit stock. You know what? A lot of people think Reddit is a meme company, like just a meme of a stock, but no, they actually have great financials. And I do own Reddit, by the way. I might be biased. Actually, if I go over here, actually, Reddit's down 1% on the day. Reddit has been, so actually, I think it's my best performance stock in here. Yeah, we're up $660 on Reddit. So they've been an absolute crazy performer for us. This is our growth portfolio, by the way, everyone's favorite. We're up 17% all time in here. But one of the stocks we own in here is Reddit, and they deserve to be at an all-time high. They're beating on every expectation. Like they beat on revenue. Like the orange line is what the analysts expect. They beat on revenue. They beat on net income. They beat on EBITDA. They're super profitable, making net income every quarter. They're super growthy. Revenue's up 77 after growing 53. Their ARPU, their average revenue per user, is up 48% year over year. They literally have no debt at all. This is a completely debt-free company with $2 billion of cash. Like that is insane. Like that is a great balance sheet. And it's one I can trust. I certainly wouldn't buy it at this valuation. I really wouldn't even touch it over like $210, but $220. Yeah, that's Reddit. They deserve to be at this new all-time high, I think. No way, dude. Yo, shout out to the homie Brandon on the YouTube stream. Yo, Brandon with the $5 super chat. I really do appreciate you, Brandon. I hope you're having a great Sunday. Yo, shout out to Brandon on the YouTube stream. Yo, by the way, the best way to support me is watch the stream from YouTube. I'm trying to build up my YouTube channel on there. But yeah, Brandon, if you got a stock you want me to look at, let me know. I am going to end the stream in like 10 minutes. So if you got a stock you want me to look at, let me know, Brandon. I really do appreciate that gift there. Thank you so much. So Matthew said CALM. This is one of my favorite picks right now. I do own them, and I'm slightly down on my position, and I'm actually about to buy more. Not financial advice here, but check out this stock right here. It's a chicken egg stock. So they just sell a commodity. They legit just sell chicken eggs. They have the largest market share for chicken egg sales in the U.S., and this business is booming recently. With the bird flu. Some of this other stuff like chicken factories burning down. They've had so much pricing power. We've all seen egg prices. So they've been able to grow their revenue 72% year over year. And out of this $1.1 billion of revenue, legit $350 million of it was after-tax net income. Like this is insane for a commodity company. And also they're debt-free. Actually, I forgot to mention this part. This company has no debt at all, literally debt-free, and $1.4 billion of cash. And the whole company is only worth 4.85. So 33% of the entire market cap is their cash on hand. They're debt-free. They're trading at 4 times net income. They just sell a commodity. They just sell chicken eggs. They have an insane dividend, a 6.74% dividend yield. Their dividend actually changes every quarter based off how much they make. But I really love this company, and I do owe them. I might be biased, but there's your chicken egg stock. Again, so just sell a commodity that probably won't outperform in the long run, and the net income is expected to go down in the future. But yeah. What up, Gary? What up, dude? He said ING stock. Let's check it out. So this is ING Group. They're at an all-time high. So first off, congrats if you own this company. You got to be up on your position. Let's see what industry they're in. So they're at a wholesale banking, other retail Netherlands, Germany. Where does the revenue come from? So yeah, 25% of the revenue comes from Netherlands, then Belgium, Poland, Germany. Okay, so let's check out the profits here. So net income is good. They're making 1 to 2 billion. Oh, wait, this is in European. So we're going to convert their currency to USD. So actually it grew in USD year over year. So if we go to the revenue is up 9.5. And the net income is only up by 3, but they're making 1.5 to 2 billion of after-tax net income a quarter, 4.75% dividend yield, safe payout ratio. So it looks like a international bank. So if you want exposure to a bank in the Netherlands, Belgium, get a decent yield, that's ING stock. Let's see here. What do I have to do? Have you run OPAD? What up? Let's check out OPAD stock before we go here. OfferPad Solutions. So yeah, you got to be really careful about this stock. And hey, F4N, dude, thanks for the roast there, F4N. Yeah, we'll look at APLD after this. So yeah, OfferPad Solutions are only worth $150 million. Like that's an extremely small market cap. The stock's at an all-time low. They're worth $150 mil. Cash offer That's the industry they're in. I don't know what that is. 100% of the revenue comes from the US. What are the sales though? The actual revenue, the lifeblood of the company. I accidentally clicked that, so it's probably going to load slow now. All right, so this is not good. I can honestly see why the stock hasn't done too well. The revenue is down 36% year over year. So the revenue has fallen 36%. They're losing net income every quarter. Not much. I mean, 10 to 15 mil. But yeah, this revenue decline, the sales decline is kind of scary. And yeah, look at their assets. Their assets just fall every quarter, leveraged up went from the liabilities were 80% of the assets. Now it's 90. Not great. So I can totally see why that one's not done so well. I'd be super careful. Declining sales. Yeah. So thanks again, F4N, for the rose there. He said APLD. And hey, B. Ryken, thanks so much for the 4 roses there. That's actually owned by NVIDIA. So if we go to the NVIDIA portfolio right here, one of the stocks they own is APLD. It's 4.5% of their entire portfolio. And this one has really been rallying on the partnership between them and CoreWeave. So, it's not there anymore on the news tab. But yeah, CoreWeave and APLD went to a huge partnership. They've really benefited from being in the NVIDIA ecosystem. OG Watch has said, what app is this? Yeah, hey, it's in the link tree in my bio, the first link there. So yeah, they're a data center hosting business. That's 100% of the revenue. All their comes from the US. So anyway, they're in the NVIDIA ecosystem, partnering with CoreWeave. I wouldn't pay its current valuation, but they seem really interesting. US Bank, please. Oh, yeah, USB. Cash offers real estate. Oh, okay. Thanks for that, kitten. AEHR. Actually, let me look at AEHR stocks. So AEHR is AEHR Test Systems. The momentum on this one has been pretty insane the past couple weeks here. They had a huge gap up on this day. Let's see if we can figure out what happened here. So there was some good news that we might not be able to find. They're in contactors. Says the revenue's down 65%. They're in systems and services. So if you go to the market, most of the revenue comes from Asia. So do beware, this basically isn't an American company. They're in, nothing's really blowing me away here, to be honest with you, man. Like revenue's down 15 after falling 25. Net income went negative. They lost 3 mil. Like they've lost net income every quarter for the past year. They have a good balance sheet though. I will give them that, but I don't love declining sales like this. But there was some sort of good news right here. I don't know what this momentum day was right here, but there was some sort of good news that maybe changed the outcome of the sentiment or something. Interactive brokers against Moomoo. The stocks or the actual platforms? Because that's a good question. Oh yeah, US Bancorp. Let me pull up that one. So that's USB, and this is like a higher yielding bank stock, and they haven't really outperformed. So look, here's US Bancorp right here. We look at the stock, it's well down bad from 2019. So the stock is way below where it was in 2019. You look at all the other bank stocks like a JP Morgan, a Wells Fargo, a Bank of America, like they're all doing great. Like USB has unfortunately underperformed. I think it's because of their higher dividend. But yeah, look at JP Morgan, for example. They're significantly, they're 2 to 3x above where they were in 2019, and USB isn't. So let me show you this right here. One thing I like about this stock is the yield. You get a 4% dividend yield right here, 52% payout ratio, which is pretty insane. But yeah, wealth, corporate, commercial, and institutional banking, it's down by 1.9. Consumer and business banking is down by 3.3. Payment services is up by 4. So it looks like the actual bank businesses aren't doing too well. Their main 2 banks. So the total revenue combined is up by 2%. So at least the revenue did grow. But, comparing that to a JP Morgan or Wells Fargo or something, the growth isn't as good. So, but they're still making insane profits. They're making 1.8 billion in net income a quarter. Let's see how much the dividend costs. So the dividend only cost 880 million. So they actually have a lot of room to raise their dividend. Dividend cost 880 million. And since they have leftover money, they've done some buybacks. They're spending like 100 mil a quarter on buybacks. So pretty cool. What's the ticker symbol for Moomoo? Yeah, this app I'm on right now, Moomoo, the ticker symbol for it is FUTU. So check this out right here. Yeah, so again, this app I'm on, this brokerage is called Moomoo, and here's their stock publicly traded. And they're doing great. By the way, even if this stock right here were to go bankrupt, you're still FDIC insured for $250K, but it's good to see that the app we're using is actually doing good financially. They made $330 million in net income this quarter. Revenue grew 69%, net income grew 111%, so they're expanding margins. Margins legit at 48%. They get high margin commissions. They collect interest income. Look at this. Here's the interest income. I use their app to collect interest on my cash. I have $1,000 of cash. It earns 11 cents of interest a day. They also earn a little bit of interest on top of the interest I receive, and then they bank that in their bank accounts. So anyway, yeah. That was the stream. I actually got to go. I hope you guys have a great rest of your Sunday. By the way, if you want to hit the follow button, we stream every Sunday this exact same time. We stream every day, by the way. We stream every single day. So if you want, number one way to support me, by the way, is subscribe to my YouTube channel. I'm streaming on YouTube as well. If you missed anything, you can replay it. My YouTube channel is called Nathan Robert. You can just type into YouTube Nathan Robert, but it's also in the link tree in my bio. But yeah, I hope you have a great rest of your Sunday. Again, if you want to get this app I'm on, it's in the link tree in my bio. First link there. Oh, let me give you a quick portfolio update right here. So does Moomoo have tax loss? It does. So you can sell shares you bought at specific prices. But yeah, let me give you a quick portfolio update before I go here. Here's our main taxable account. The market is open right now. The QQQ is down 0.1. So here's all our stocks in here. Here's our total percent change. We got all these are S&P 500 companies, Meta, United Rentals, Google, McDonald's, Constellation Energy. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account. This account's also pretty much at an all-time high right now. We started it exactly a year ago, but yeah, these are all the stocks we own in here. Iron Mountain, Main Street Capital. InnoData's been crazy. Here's our total percent change in every stock in here as well. Only down on CorMedix right now. We also have finally our Webull account. This is our growthy portfolio. We're up 17% all time in here, so really haven't outperformed because we have some losers in here like UiPath, Zoom, and we have some hidden losses like ChargePoint. I took a $2,000 loss on ChargePoint that I sold it all, so you can't see it on here. And thank goodness I sold it all because if I didn't, I'd be down like 4,000. But anyway, yeah, I love being fully transparent. Again, best way to support me is subscribe to my YouTube channel. YouTube channel is called Nathan Robert. Go leave a comment. Say you came from the YouTube stream or something. But anyway, William, hope you have a great rest of your Sunday, dude. He said, be careful. Historical this week has been the worst week for the market. Keep that in mind. Hey, you know what? I didn't, September is normally like a bearish month, so that is interesting to watch. But anyway, see you all later. Hope you have a great rest of your day. Thanks for everyone who left a gift and everyone who followed and subscribed. Thank you so much. All right, hey, see you, homie 307. See you, Gary. See you, Kitten. Hope you have a great rest of your Sunday. See you later. Thanks for showing up to the YouTube stream. Make sure to turn on the notification bell if you want to get notified the exact second we